y'all.
Cheers. Cheers, everybody. Today we will not be starting with the, what do I call it, the dashboard? Well, first let me take a sip. Today, for once, we actually have some, what I consider pretty positive GameStop news, huh? Look at this. It's up after hours. Nothing like crazy or anything like that. But we do have to start with this, not just to talk about it, but I actually need to do some research on this because a major monster stake taken it looks like a lot of the position was built over the past couple weeks. The damn stream's a little bit slow, but by RC Ventures, and it looks like this guy is a billionaire, and but he is involved. More importantly, he's involved with Chewy. He co-founded Chewy, which was acquired by what was it, PetSmart. Well, we got to look into it right now, but he's the type, and it was a 13D that he filed, like an activist position that he took in it, right? So this is big news. We like legit. So I just got the news. I was out and about. I was out on a walk with my daughter, and I just got the news while we were walking around on the way back. And so I saw it on the phone. I'm like, holy shit, that's a big. What caught my attention was the big size stake. I actually didn't know much. I didn't know RC Ventures, right? I never heard of that. No one's heard of that. But it must be his personal fund or whatever. And then I saw who was backing it, and then I'm like, holy shit, I gotta. The good thing there's a stream tonight because I gotta research this. I gotta research this ASAP. But my quick take is, and I haven't even looked up on it, but I've chatted with a few folks, but it sounds like he might be like a great potential. I mean, it's a 13D. It's not a partner, right? But he could have some great ideas for a company in GameStop's position, and. I tried to quickly look up the 13D while I was on my phone, but you try to look at some SEC filings while you're on your phone. That shit's a mess. So sometimes they'll post some commentary within the 13D itself, but so we'll see. I didn't see anything, so maybe there's nothing there. But I don't think he's publicly commented on it, nor would he, right? If he's building his position, he'd take his time. But now that he's filed a 13D, we got to look into it. I don't know anything about this guy, but. Maybe maybe the plan is to talk about it at some point in the future, in the near future, maybe even with the consoles coming out. But it could get people's attention. Like there's already a billionaire invested in GameStop. With what is it? Donald Foss is his name. Let's just pull. He's been invested in since I think March. March is when he filed his 13. I think it's a 13G for him. But I mean, this is the biggest fund. Of anyone, you get the institutions, right? But this is bigger than Heston and Permit. It's bigger than Must and Foss. It's bigger than Scion. It's a huge position, and just depending on what this guy's background is, it sounds like people might know who he is, but I didn't follow Chewy that closely, but I did see that it was found. Let's look this shit up. What am I gonna just speculate here? Well, we got 3 hours. Let's get going, huh? So let's RC Ventures, and if we pull up the filing, 13D. I actually just had looked at. I've been looking after hours. I did it like the past 2 Fridays. I didn't do it today. Oh, I did do it today. I did it at like 4:10. I'm like, there's been no filings recently, right? And I looked at like 4:10, and obviously this one hadn't been filed yet. But I'm like, especially if you have an announcement on a Friday after hours or something. Remember, the stock price was up big last week too, on Friday. And so I was thinking last Friday, I'm like, oh, is someone gonna file something? After hours today, and so I was like watching closely after hours last week, and then no one filed. I'm like, what the hell? And then the price action the past 2 weeks has kind of looked like. I mean, it's been up a little bit, right? And we see this, and it's not alone, but it's kind of a unique chart in this regard. If you have other charts that have kind of been plotting along like the past 2 weeks, It kind of looked like someone could have been building a position, but to be honest, I've said that before and I was wrong about it in GameStop too. And I'm like, oh, it kind of looks like someone's building a position. But this time I'm like, I don't know. And then no one filed on Friday. I'm like, shit, no one's building a position. But we got it today, and I think you need to file the 13D. This thing's riding up on me. I think you got to file the 13D within like 10 days or something. Is it 10 days with it? 13, like a 13G, 13D when you're taking a 5% position in the company. I think you need to file within, I want to say 10 days of when you establish the position. So, but even still, I thought there was so much action last week that it could have been filed last week. So anyway, we got it today, and then if you open up the 13D and you scroll down, just a heads up, if you don't know this, you scroll down to the bottom. If it's a 13D, it's an active position in the company, not a passive position, then they past 60 days. I was going to say, I started on my phone, and I'm like, how far back does it go? It's past 60 days, they have to file their, I actually don't even know exactly. I think they got to file the transactions that they had within the stock itself, but they may have also had to file communications that they have with management. It could be, maybe Barry, if you check out Barry's, he included all his back and forth with management over like the prior 12 months or something. So that's what I was quickly looking for, to just see, number one, when the position was being built. And you can see here, he's building the position over the past 3 weeks, or is it 2 weeks or 3 weeks? All right, looks like mostly 2 weeks, but and this is 60 days. Okay, so this actually answers my question, because my question was, did they only, if it was shorter than that, then maybe he had been building the position up longer and he only had to do the past 2 weeks or something. But this clearly says 60 days, so this might be the extent of his position. I didn't add all these up. But if you add all those up, it looks like 2, 4, 6, 8, 10. It's at least, it's a good chunk of the position. It's all the position, is it? Ryan Cohen, what is this? Was he doing it into? So this is what we got to look into. Like I saw the RC Ventures, and then I saw Ryan. Oh, it's Ryan Cohen Ventures, right? RC Ventures. I'm an idiot. What was going on here? Did he build the stake personally and then sell it to RC Ventures? There was a note here reflecting an internal. Boom, there you go. Interesting. So he was. I haven't seen this before. Not that I although I do. You know, we haven't been doing it. I keep on forgetting it sometimes to do in the stream. But if you check out Fintel right here, the activist, we have definitely done it during the stream, but I do it as not as often as I check Open Insider. You know, we do an Open Insider every damn stream, but I try to do this every couple days at least. It kind of got screwed up because when the quarter end filings are happening, this just gets bombarded. But this is actually how I came across it today. I came across it right here. See, RC Ventures, because RC Ventures wasn't an insider yet, right? This isn't an initial stake. It's not green or red. This is how they do it on Fintel. It's red if they were trimming or adding, or green, red if they were trimming or selling out completely, or green if they were adding or building, whatever. And it was just, obviously it's not lit up anything. And I'm like, oh shit, it's a new thing. And I'm like, RC Ventures, what the hell is that? And and then I saw this 5.8, and then I saw 9% stake. I'm like, holy shit. So anyway, then I'm like, all right, got to go check the filing. And then that brought me over here. But I was wondering, what RC Ventures was. Never heard of it before. Like you see, Must Asset Management, they had taken that position, but I had no idea who they were. And then I looked into them, and they were an Asian fund. And I checked that they have a website and stuff, but I never heard of them before. I couldn't get a feel on what the plan was or any insight there. It's just another fund who owns some shares that if they hold them tightly, then it's a lower float. All right, so we come back here, and then looks like he's building the stake in his individual capacity. I don't understand. What's this? How did he? What's this? August 13th, approximate price per share, $6.17. What is that? The only thing I could think of, I have no idea what this is. This stock price was never at that. The only thing I could think of, if this is the very first transaction, maybe he had built this position previously, and that this is just him like noting with it to just be as transparent as possible. I had 141,000 shares as of August 13th, and my average cost base was 617. That's how I interpret this, but I don't know. I'm not a expert on 13D filings, but that's my guess. Is that was his personal average cost basis, and then after that he's like boom, 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 boom. Then here come the subsequent transactions that actually happened within 60 days. Just a guess. I don't know. It's not that important, but it caught my eye because we know the stock price hasn't been there. So then you see build, 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 and this. It's not the bulk of the volume, right? Because we know we can check out what that volume was right here. And it's just a fraction of it, right? So even, let's take August 18th. Okay, so actually it's a good chunk of volume. August 18th, 3, 4, almost 800K. When's that? August 18th. So you know what I mean? It's a good chunk of the day's volume, but it's not all of it. I was just more curious about that. How about August 19th? 200, 400, 500. So he's doing a good job of building the position. This is good. I mean, this guy knows what he's doing, right? He's a billionaire. But I was just curious as to whether he was dominating the volume, but he wasn't. And it was still rising, but maybe that's how that works. Someone's building a large stake. It impacts the price. And then what happened? So then he transferred the shares to RC Ventures. Then he started buying a couple shares for RC Ventures on August 27th. What's that? When was that? It was yesterday. Shit, this is recent. And then August 20. Oh, so this was okay. Then the sale, then the transfer, and then 100, 300, 400, 500K. What was today? Okay, just a fraction of it, but still. Okay. All right, so now I want to read a bit about him. I feel like he might be commonly known, but just not by me. And again, I didn't follow Chewy that closely. But let's now that I'm sitting, this is legit the first time I've sat at the computer since I got this news. So let's actually look at the 13D. Oh, this thing. Does this headbands? I used to be all about headbands, right? Now I just picked up a new one in this one. I got the long hair. Right? I grew up my hair back in the day, and I needed the headband just to get through the day. And so I picked up a new one, but now just testing it out. Let's see how it goes. Okay, let's go up. This is just your usual stuff. 5.8 for the first filing. That's when you see 5.8 and 9%. You need to file these 13Ds, 13Gs at 5%. That's what I mean. To see the initial filing at 9%, I was like, what? He must have been happening within the past 10 days that he breached the 5%. We could pencil through it, but who cares? And then, but it's just it's saying something. You know what I mean? And okay, so is Ryan Cohen, 5.8. It is a 13D, so it's an activist stake. But I looked quickly. I didn't see anything in here where he's talking about shit. Purpose of the transaction. You often see this. This is like boilerplate. From what I could tell, is boilerplate language. When acquired, we're undervalued and represented an attractive investment opportunity. But that's all it says. You know what I mean? A lot of this is just boilerplate stuff. So there wasn't anything in here, which is fine. I was just hoping for a little bit more, just for selfish reasons, just so I could better understand what the plan is. Okay, but let's see. From time to time, to increase or decrease its position in the issuer through, except as otherwise disclosed, reporting bodies do not have any present or plan or proposal which would relate to result in the matter set forth. Probably buying the company outright. He's probably saying, I have no plans to do that. Tend to review their investment in the issuer on a periodic basis from time to time to engage in discussions with management and the board. So, I mean, this is standard stuff. If you follow 13D, you're probably going to be doing this, right? Time to time to engage in discussions with management and the board, shareholders, blah, 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 blah. Boilerplate. Depending on the various factors, including without limitation, the issuer's financial position, investment strategy, and execution of that strategy. May in the future take such action with respect to their respective investments, blah, blah, blah. Okay, so it's all boilerplate. Board composition or operations and strategy of the issuer, including... Oh, okay. Do we have something here? Something specific to GameStop? All right, let's check this. Depending on various factors, including without limitation, the issuer's financial position and investment strategy and the execution of that strategy, the price levels, all the different variables. The reporting person's main future takes such actions with respect to their respective investments in the issuer as they deem appropriate, including without making proposals concerning changes to the capitalization, ownership structure, board composition, or operations or strategy of the issuer. This too strikes me as boilerplate, but including by independently exploring plans or proposals advocated by others or variations thereon, purchasing additional securities of the issue, taking more market action, selling some or all of its securities. All right, so a lot of it's boilerplate, some stuff, independently exploring plans or proposals advocated by others or variations thereon. It's kind of interesting, right? I don't know that I've seen that too frequently. But again, the whole thing strikes me as boilerplate, but even still. Okay, so, but not much else. The biggest takeaway is just the size of the stake. That's all. And then now let's look into Ryan Cohen. And anything with RC Ventures, really. I looked, they don't have anything else. So if you click on their name here, this is what I did. RC Ventures, there's nothing else. And what we can also do is pop open the, watch this. You do SEC name, RC Ventures. There's a couple of them. Let's guess. I'll go with Florida. Ah, shit. Oh, that's it. Yes, right. All right. This is the first filing. This is the first filing. Did he just spin it up? Interesting. Oh, shit. 2005? What's this? Same company? Probably not, right? It's a scanned document from 2005. This is probably something separate. Just curious. Doesn't matter. Mark Seeley. Okay, someone different. Just curious. Doesn't matter. Okay. All right. So nothing. First filing for RC Ventures. All right, and then so we're probably not going to see shit, right? I saw this stuff too, but as it turned out, not the right, not the right RC Ventures. Different. I think they're given financing companies in Bangladesh. Yeah, saw that. So there's probably not even a website for it. It looks like he just spun this up. You know what I mean? Just let's check this. Small business. This ain't it. So this not gonna be out here. We're just gonna look into his background. That's where we're gonna spend most of our all of our time on this. There's nothing here, right? Why would he make a website for this? He wouldn't. There's not gonna be shit. I just wanted to see if people were talking about it, but it doesn't look like there's anything. All right, so let's just look into let's look into Ryan Cohen. So we're gonna see. All right, yeah, co-founder, e-commerce company Chewy, right? They sold. You know what surprised me is that it was founded in 2011 and sold in 2017. I didn't realize how short of a time period that passed between when Chewy when they founded it and when they sold it. Holy shit, right? Is there some sort of record? Is there some database that tracks this of I mean, I guess Facebook reached $1 billion pretty quickly, right? But just that speed, we know there's a whole bunch of $1 billion companies out there, right? But the speed at which from inception to that $1 billion valuation, I don't know. There probably is something out there, right? Oh, didn't I open Crunchbase? Did I not open Crunchbase? I meant to open that. It doesn't matter. But you know what I mean? 2011, 2017, that's no joke. So, as I recall, and I'm not that, I wish I were more dialed into Chewy, but of course it wasn't like your classic value type of company, so I wasn't too dialed in. But as I recall, PetSmart, I do remember PetSmart buying it, and everyone applauding them as in this is even though I saw the price tag, and everyone saying that this was a tremendous acquisition. I believe. If that's not accurate, let me know. But all right, so let's see this. 2011, at the age of 25, I remember Mr. Chewy. I did see that. It says inspiration for picking the pet category. They went the pet category, and I asked my wife. I'm like, hey, do you know Chewy? I mean, I know of Chewy, right? But I'm like, you know Chewy? And she's like, yeah. On the commercials. So I'll always, whenever I come across a company, you always see me lament about being an individual investor. I don't know how to pronounce things. I've never heard of things. I don't even really chat with many folks who are tracking the same stuff, right? And I said, so I'll ask, we were talking about, maybe I mentioned this on the stream, DBI, DSW, that company. I said, you still shop at DSW, right? And just today, actually, I think she might have got something. I think she got some shoes or she ordered it online or something. I'm like, there you go. So we're still shopping there, right? So that's that's my due diligence of, what's Phil Fisher call it? What's that word? What's that funny word he's got for it? The word where you go around asking people, whatever. But that's more so for management. But so anyway, I asked, and she goes, "Oh yeah, I know Chewy from the commercials." I said, "Okay, yep, just making sure." By 2016, he was originally approached over 100 venture capital firms and was rejected by all of them. 2013, he secured the company's first. Look at this! Wow, what a quick turnaround, huh? They really crushed it, you know. There's probably someone has a better understanding of the narrative that unfolded here, but I mean, I just. You see how quickly it grew, and it has been a huge success. That in itself speaks to me. But I'm sure there's a magazine article written about this that goes into greater detail. I'll check Seeking Alpha here in just a minute too. PetSmart purchased $3.3 billion, the largest e-commerce. There you go. So that's the largest e-commerce acquisition of all time. Named Cohen, it was 40 on 40. Vox Denim, yep. PetSmart. All right. In March 2018, he stepped down as CEO too. So this is I want to read more about him. But like, this dude knows his shit in the e-commerce world. He does kind of seem like he's forward thinking, and so, and it's a 13D he filed, which is important, right? Because he may be getting involved and interacting with management and shit. And it may act as a bit of a visionary of sorts. Of course, they probably have their own, management has their own plan, the existing investors have their own plan. You've seen me talk about it in the videos, right? It's not as if they're blind here walking forward, but nevertheless, someone of this stature you think is a huge addition, especially the negative sentiment around GameStop. You hear me talk about how heavy this negative sentiment is, right? It's just ridiculous. And like, it feels like the people, like the handful of us on this stream and a couple of the handful of investors I've mentioned on my videos and stuff, there's like 8 of us who are like bullish on GameStop and can see even the potential of it. But everyone else on Wall Street is like, it's poo-pooed, and it's like, it's ridiculous, like it's beneath them. But someone like this, like even Bari, you know what? People even making fun of Bari. It's like, what the hell? Making fun of Bari? Like, who are you? And make fun of Roaring Kitty. That's okay. Why, right? But make fun of Bari. So it's like these deep value investors, who gives a shit. But then you get someone like this, like someone who they're what is he? He's 25. He's born in 86, millennial, right? And then like but then hugely successful company, and then they're getting involved with GameStop in this terrible year where everyone has given up on it and there's no future, blah blah blah. But then he steps into it. That in itself at least people start talking about this. You know what I mean? So you'd expect this. I mean, I don't know how. Someone like this, Chewy was it was a big deal, right? So I expect this, you think people are going to be talking about this, right? And maybe that can help turn this narrative a bit, try to spin it more in the positive fashion. It kind of gets and then in 2 weeks, we're getting earnings, right? They just announced it on Wednesday that they're going to announce it, like 11 days, September 9th, whenever it is. So like, this can get the conversation started, right, with it before earnings are even released, and then I don't know. So then we still have to see what he has to say and everything like that. But I just talk about how heavy this negative sentiment is, and you just need to people to stop thinking so bearish about it. And this is a big step forward. And even though we know nothing except this damn filing, but I'm telling you, it's so undervalued and the sentiment is so bearish that we'll see. So I expect more. Let's see if we get more articles about this next week. And all the big firms picking up on it and talking about it, and I'm very curious to see what people have to say about it too. I'd love if he talks about it too. And we got a question, Derek. Oh, hey Derek, cheers, mate. I think there are too many cooks in the kitchen with all these activists, even if they bring. So I don't know about that. So Derek's asking if there's too many cooks in the kitchen with all these activist investors, even if they bring great experience. I mean, that's a worthwhile question, right? That's a good question. What I would say is, and there are a bunch of activist investors now, right? These aren't all 13G. Like Bari was 13D, although now he's under 5%, so it doesn't still count. But Hester and Permit, clearly activists, right? They just got a position on the board, and now this guy. But that's conceivable that could happen. If you have any examples yourself of having seen this in the past, I'd be quite curious of that, where there's too many activists getting involved and maybe they clash or something. We were just looking at a company on Wednesday on the stream. That there was one firm, I don't even remember what was the company. I don't remember the company. One activist was trying to egg on the management of a company, and another big fund had a strong position. Oh, B. Riley had a strong position, and then the activist investor ended up giving up and going away. We saw that on the street. I can't even remember the damn company. B. Riley, what was it? It was something. They were insider buying recently. Anyway, it's totally conceivable that could happen. I don't think that's the case here, and my reason would be. Because of what I just said about the importance of the sentiment shift here, and because everyone views GameStop and its legacy business as antiquated and everything like this, someone like this getting involved, I would think, would trump any concerns that one might have about these types of things. But indeed, if his views truly clashed with the ideas being shared by Bari and Hester and Permit, then that's something to be discussed. But until then, I don't see reason to be concerned about that. But a good question and something to ask. But now 9%. No, he's the biggest investor. Isn't that crazy? You know what I mean? I mean, these Hester and Permit have been working, and even Bari, they've been invested forever. Especially Hester and Permit, I think. And then this guy just steps in with the biggest position. I would always surprise me that Hester and Permit, they're not a gigantic fund, but they get a good sized stake for. I don't know what percentage of their fund it is, but I always thought Bari would take a larger position, but. And then he went back under 5%, didn't buy any more. It's his top stock position, excuse me. in his portfolio. But even still, I always thought, where are all the activist investors taking a bigger stake in this? And to be honest, it was a little bit concerning for me, because as obvious as like blatantly cheap as this seems to me, and I always thought, why aren't more people talking about it? Why aren't more people, billionaires or big funds, taking a stake? It's too small for a lot of huge funds. But even still, no one was even talking about it or doing anything with it. And even though I don't know this guy, like if someone like Carl Icahn got involved, that was what I was thinking. Remember, he got burned on Blockbuster. He got burned on Blockbuster, and so right, and everyone makes this comparison to Blockbuster. But he got burned on it. It didn't pan out. It wasn't totally. It kind of wasn't the management team like kind of fighting him on things and stuff. And so he kind of got burned. But I was always thinking, what if Carl got involved here? Just saw the obvious cash flows to be earned here, and but he didn't and everything. Anyway, so now I'm rambling here, but you know me. That's what I do, especially when it comes to GameStop. So then I was just like, nobody. And so I don't know this guy, but his expertise, I think, would trump any concerns I might have about them clashing. I also am not so sure they would clash. Let's not assume that. Not that you are. You're not assuming that. I get that. But they might all be on the same page, and then maybe this guy is just he's just adding to it. You know what I mean? Maybe he has brand new ideas. I don't know. But for now, I'll withhold judgment on that front. And I just view this as completely bullish. Like not bullish, but I mean like positive, completely positive. What if Hester and Permick came out with like a news release or a press release saying like, don't listen to Ryan Cohen or something, I'd be like, oh shit. then different ball game, right? Yeah, we'll see. I'll be very curious about this. Maybe he says, what if he comes out next week and he goes, and he agrees with what Burry was saying in that press release that I shared on the video of Burry praising management during the vote for the board. And then he's like, they're on the right path. This is great. I got a couple additional ideas. Let's do this. And it's like, see ya. Look out, shorts, right? You know what else I was thinking too? We're gonna look some more into Ryan Cohen here, but it's such a big position, right? Reduced float now, right? In theory, these people can all sell. It's not like it's permanently locked up or anything like that. But let's say he's 13D, he's in it, right? And that's another 6 million shares off the table for the shorts. So that float shrinking, and just another thing. I know people will be talking about that too, right? But just such a big stake. You know what I mean? It's more meaningful because it's such a big stake. How many times can I say that in one stream? All right, so before we do that, I just like to check Chewy. Let's check a Seeking Alpha article. At the time they were Seeking Alpha goes way back, right? Let's see. It should, right? What? 2019. See what I mean? That's the earliest Seeking Alpha article is 2019. What is this? How can that be? Wait, it's just PetSmart doesn't trade anymore, right? Okay. Wait, PetSmart. They go under Chewy, right? Yeah, okay. Okay. I don't understand that. Holy shit, what a nice chart, huh? Holy Toledo. Oh, what happened? What happened? Did they, is that when they, it doesn't matter. Did they do like a ticker change or something because with PetSmart and stuff? It doesn't matter. Okay. I was just curious. Shit, so can I not, look at this chart though. That looks nice. That looks nice. Shit. How do I find these old articles? I can't find the old ones? All right, let's see this. The largest sale ever of an e-commerce company backed by venture capital. Acquired for $3.35 billion. The transaction tops the $3 billion that Walmart paid for Jet. No comments on it. Damn. I'm looking forward to the articles that will be written about this because I'm so out of date on Chewy and that. I just know that it was really like hyped up, and a lot of stuff is hyped up, but like legitimately hyped up by people that I respected. Who talked it up? I think there was someone on Seeking Alpha now that I think about it. I forget who it was. Was it Bloom? I think Bloom talked it up, actually. Jeremy Bloom? I think he talked about it at the time. I forget, but I can't. How can I track that down? I don't feel like tracking that down right now. But he knows his shit. Okay, sorry. All right, what the hell? Damn. So just read just a couple of this. Wait, oh, it happened in. Oh, yeah, what was that 2019 thing? All right, let's just read a couple just real quick. And then maybe a couple bios or something like that. There you go. Ryan Cohen started a company that took it on his own. Boom. January of this year. Oh, that's a good one. Forbes this year. That's good. So, oh, he has a website? Oh, shit. Sick. All right, we won't watch the... I won't bore you on the stream with me watching videos. You know what I mean? I mean, I'm reading shit. This is actual research that I'm doing right now, though. I want to have a better feel for it. I wouldn't do this for all companies, right? But it's because it's a huge position. All right, so he's got his own website. All right, so that's going to be helpful. They've compiled everything in one single. Boom, that's sick. Keep that open. All right, acquiring Chewy 3.3. I just want to see some commentary on how well PetSmart was doing. The fast-growing pet food and product site, Chewy.com. Oh, can we also check that, by the way? I haven't bought anything from here. All right, just curious. Pet stuff. The deal is huge one by any standard, bigger than Walmart's. Yep. One of the fastest growing e-commerce sites on the planet. Wow. $1 billion in revenue last year. What was only its fifth year? Okay, founded by Ryan Cohen and Michael Day and built a cult following for its excellent customer service, large selection, and fast shipping, and it quietly raised at least $236 million. Excuse me. Its under the radar status was probably aided by the fact that it was headquartered in Fort Lauderdale, Florida. Not a big market. Yep. The deal seems like the type of bet the company acquisition by a traditional retailer that commerce focus. Yeah, sick. Okay. They knew what they were doing, huh? Jet.com was a huge deal. It represented a fraction of Walmart's. Yep. Its intention to acquire Tuesday, but okay, so not much in here. Just kind of looking for a little bit of background on their process or how revolutionary it was. But did they just crush it as a business? You know what I mean? Like huge selection, good customer service. That's all usual business stuff, right? Nevertheless, I mean, it's a market that everyone knew about. To spin up a company in 2011 and somehow dominate that market. You got Amazon you're competing with too. We'll get to that article, but even still. Oh, when was this one? What is this? April 2019. PetSmart is moving forward with the plan to take public its fast-growing online pet business Chewy just 2 years after acquiring the company. IPO. Just 2 years after. Oh, okay. So they took a while before they IPO'd it. Oh, okay. Oh, okay. You don't see that too much. Online presence. Okay. The move was built as a way for PetSmart to establish a robust online presence. Sound familiar? That supplemented its sprawling brick-and-mortar footprint of 1,600 stores. Sound familiar? How about 5,000 stores? Sick. Last year, however, PetSmart spun off a portion of its equity in Chewy. Okay, so it spun off a portion of its equity in Chewy and set the stage for a potential public offering or sale. Who said they didn't approve such a transfer? Oh, okay. PetSmart was acquired in an $8.7. Wow. Holy shit. PetSmart was acquired. I forgot that. You know what I mean? Like, I tracked this stuff, but I can't maintain it all. In 2015? And then they bought it. Oh, it wasn't public when they acquired, and then they spun it out. Got it. Okay. PetSmart will continue to be the company's majority shareholder after the IPO. Chewy was launched by 2 college dropouts who met in a Java chat room. Sick. The online-only pet business quickly and quietly gained traction. Today is responsible for 45% of the dog and cat food. Wow. 45% against Amazon, which puts it on par with Amazon according to a market. Wow, huh? Online purpose still represent a fraction of overall spending. That is changing. Look at this. You see what I mean? Pet food. You know what I mean? They Right. I mean, pet food. I'm trying to think. I mean, it's not as you can't download pet food, right? But you do. You can imagine why a lot of people might pick up pet food while they're in a store when they're food shopping or doing anything really. Whereas gaming, it's a click of a button. So it's not a perfect. It's not a comparison. I'm not just saying that, but I just mean Ryan and Michael were on the cusp of this and like being how can we start causing people to buy this stuff online from us. So how much more can I read about this guy? You know what I mean? It's pretty clear. What else could I? Unless he started talking about gaming, I guess that would be sick, but I doubt that. He's himself a pet parent to Ty Lee, his apricot teacup poodle, capitalized on the big bucks that pet owners are willing to spend on their family pets. In the company's regulatory, it describes a phenomenon of pet humanization, which helps to drive sales on items like grass-fed beef and orthopedic. Yep, better products for customers. Pet parents increasingly view pets as part of the family and are willing to spend increasingly larger dollar amounts on higher quality foods and services for those family members. Okay. Chewy offers free shipping on orders over $49 and says it can ship. Okay. All right. That's good. All right, now we kind of got a little bit of background on it. I already feel like I'm learning a bit more about it, so that's good. IPO raises funds to help manage debt load. All right, that other one was a good article from the anticipated 41. Not much here. This looks like facts, right? Here are the details of what's happening. Chewy competes with Amazon and Blue Buffalo Pet Products. Haven't you heard of that? Which is acquired by General Mills. Trying to foster customer loyalty. Sound familiar? 60 million Power Up Rewards members. An effort which has included sending bereavement cards to shoppers who have recently lost a pet. Wow, okay. Wow. The co-founders sees plenty of growth left for the company, and long gone are the company's early days when it struggled to attract capital. Sick. They talk about that narrative, right? The importance of the narrative. Let's say it's a 13D, so we expect him to get involved to some degree. But let's say, he built this position in 2 weeks. You know what I mean? Like, maybe there's a plan here leading up to the consoles, which would be sick, right? That would be awesome. That's always been what we're talking about here. Like, this is the opportunity. The cash flows, right, to protect the downside. But the console refresh itself, people are going to be coming into your stores to buy the consoles. They want to see what you're offering, the bundles, maybe test stuff out. Like, this is the time to re-engage with the customers to see what they like, test different things. I know the Tulsa stores and everything like that, but that's a little bit different. Maybe Cohen's gonna step in here and be like, hey, here's some shit we can do right off the bat in the next couple months. In what I'm getting at is the attract capital is why I started thinking about that. It's because let's say right now I talk about everyone, the negative heavy sentiment, blah blah blah. Who is there to attract capital to GameStop? That's what I mean. That's why the stock price is in the gutter, the terminal value of zero. You need someone to tell that story, someone to tell that narrative. You know what I mean? And I think on Wednesday on the stream I was talking about like, what are they waiting for now, right? They're on the right path. They seem like they're on the right path. I've been saying that over and over again. But now it's August. I definitely said this on the last stream. Now it's August, right? It's almost September, and we still don't have that. We don't have that much of a story. Like, what's the plan? And I expected more. I expected more come August, come September, with the consoles coming in just a couple of months. You know what I mean? So that's not to say they don't have one, or that it's going to be, maybe they're waiting for certain things to unfold, and blah blah blah. There could be very good reasons. I'm just saying, I'm just kind of surprised, just like I'm surprised what the stock price was in August 2020. But this guy gets involved and talk about his ability to attract capital, the success with Chewy, his background. He clearly knows what the hell's going on here with e-commerce, considering what we're reading here, right? And just imagine if they're able to attract capital to pursue these new potential revenue streams. Then forget about this shit, right? That's what I mean. But this guy could really help with the narrative, more so than anyone else involved at this point. That's what I'd say. Even the management, I don't know. The new management team's been doing much better. People still keep conflating these management teams. They think that GameStop's past failures are a result of the current management's failure, that's just bad analysis, right? But still, not many people know about the management teams individually. But seems like a lot of people know about this guy. And sometimes you just need one person to get that story going. Pitch the story here. Like Ryan, he'd probably say a lot of the same stuff that's already been said in a lot of my videos, but so many other people, right, that already said it well before me. But then he spins it into this legit. This is what we can do with this. And then sometimes who it's coming from matters. You know what I mean? Then people are like, holy shit, this guy's got it. So attract capital on the secondary market, right? The stock price starts rising. But then even on the primary market, can you imagine if they started raising capital to pursue? I don't know if that's necessary. I don't think it's necessary. But if you can raise capital at good prices, you should, right? So, all right. Anyway, that got me thinking. That line right there, that was good. There's still lots of penetration and growth to be had just within the U.S. market, and is continuing to expand internationally. Cohen said this when he stepped away in 2018. All right, sick. Okay, keep going. Business Wire. This is just going to be, this is just their press release, right? Acquisition of Chewy, combination of PetSmart. Okay, here we go. Michael Massey. We're excited to team up with Chewy. Okay, that's PetSmart. Okay, Chewy will operate largely as independent. What'd they say? I am looking forward to working with Michael and the PetSmart team, said Ryan Cohen, co-founder and CEO. Our companies. Okay, I didn't realize he was CEO. I'm looking forward to working with Mike. Our companies have shared a mission centered on a love of pets and serving with pet lovers, which will be the foundation for everything we do together. Chewy will continue to wow customers with personalized customer service. Customer service important. Okay, I talk about the 60 million Power Up Rewards members, right? There's legitimate there's some loyalty there, right? Those are important customers of GameStop, and they're employees too, important employees of the firm too. Like, these are valuable. I mean, the employees themselves are valuable assets. I assume many of them really care about gaming and so forth. They're experts on a lot of things. They can truly help customers. And the customers would be going there, they're looking for gaming expertise and stuff. I know other brick and mortar stores, other stores sell gaming stuff, but like GameStop is the major brick and mortar retailer dedicated to it. And so you got the employees themselves who might even be loyal to the firm, but then the customers, you got 60 million of them. They're not all active, right? But even you start giving and they're doing that, right? Giving them discounted coupons and stuff like that. But are there other ways to re-engage them or give them personalized customer service? I don't know. I'm just riffing on this article. You know what I mean? Well, I have no idea. But clearly what we're picking up on is customer service has been a key part of Chewy's past success in speedy delivery of their pets' favorite food and supplies. But what you'd think, like I said, that's common. It's not. That's business. That's business stuff, right? As previously does PetSmart finance the transaction. All right, so nothing else. Keep going. That's it. Here we go. This is the 2021. Ryan Cohen started a company. This is it. Okay, that took on Amazon and sold it for $3 billion. Now he's thinking about what's next. Sick. Look at that photo, huh? Pretty nice photo. Look at that background. When Ryan Cohen was launching online pet retail, Chewy spent okay. Now we got to read this shit. This will be our last one. I'll watch this stuff later. These videos and stuff. Oh, there's gonna be a ton here. All right, I can only spend so much time reading articles on this stream. I apologize, but hyper relevant research, right? Let's just do this one. Spent a lot of time thinking about how to compete against Amazon, right? Now, a decade later, he's still thinking about the best way to beat Amazon. It's harder now, he says, but still possible. And the best idea to bet on could be the one everyone says can't possibly succeed. That's GameStop. Whenever there's a lot of skepticism, it usually means there's a lot of white space. In the case of Chewy, there was white space because no one wanted to invest in someone going head-to-head against Amazon. Okay? Now, in GameStop's case, it's not just Amazon, right? There's just the digital downloads themselves. But, all right, since exiting Chewy in spring of 2018, Cohen has been taking his time figuring out he wants to do post-Chewy. Shit, is this it? Is this what he's doing post-Chewy? I know it's the first RC Ventures filing, but is he not doing anything else right now? Oh, shit. Oh, sorry, I need to pause this. I just assumed he looks like he's really trying to do something. What do I search? Apple almost. Oh, wait, that was in the Wikipedia. That don't count. Following the sale of Chewy, Cohen made a significant investment into two companies, Apple's and Wells Fargo. His Apple investment has made him the largest individual shareholder in tech companies. Wow, sick. Jesus. Nice investment, dude. When was that? Crushing it. But that's not the same thing as what we're getting in this article. Is there anything else? Shit. Oh, he did it in 2020? All right, so I'm not going to read all these. Don't worry, I promise. I'm not going to read all these, but... oh, is that the same article? Oh, this he talks up? Okay, so we got to read that one. This is where he talks about his Apple and Wells Fargo investments. Oh, is this about him? Is this his article? Oh, shit. Oh, this is some good article. Oh, see, this is great stuff. This is great stuff. He wrote this. This is entrepreneur.com. Everything I know from everything I learned by following the footsteps of my late father, Ted Cohen. All right, so I'll read this later. Watch your expenses. Disciplined capital allocation is one of the most important skills running a successful business. At Chewy, we had a maniacal discipline when it came to how we spent money. Delight your customers. Customer service, you're just talking about that. When we started Chewy in 2011, selling pet food online wasn't a novel idea. Yep, okay. Focus, be the person other people want to follow. Was fortunate. Take the long view. He had no interest in material possessions. Each year, through thick and thin, he invested his savings into the stock market. As we scaled Chewy, many advised us to slow down and raise prices. We disagree. Trust yourself. All right, okay. Cool. Tossed much of a 3.35 into Apple and Wells Fargo. Is this it? Is GameStop the next one? Oh, is GameStop in the same discussion as Apple and Wells Fargo? What is happening? Up, down is up. Up is down. The move goes against the one cardinal rule of investing: diversification. So this is the thing about diversification. And you've heard people talk about this, right? If you're trying to make a lot of money, diversification isn't the way to go, right? Diversification is the way if you want to keep a lot of the money you make, right? But really, if you're trying to make a ton of money, concentration is the way that you do that. And clearly he did this with Chewy, but the same goes for portfolio management, right? It's much riskier in theory because of that. I mean, if you're a value investor, people describe GameStop as super, super risky, and I strongly disagree with that. It's risky. Don't get me wrong, but I think it's way less risky than people think, and that's because I feel the downside is protected by its cash flows. And so you can be concentrated. You can have highly concentrated portfolios with just a couple of stocks like this, and crush it. And in this case, he's just being smart with his money, I suppose. Apple and Wells Fargo, we don't know how much he put into it, but even still, sorry, that's a tangent that's not relevant to this discussion. Yeah, Cohen felt strong enough in his choice. It's too hard to find, at least for me, what I consider great ideas, he told. When I find things I have a lot of conviction in, I go all in. Cool. Now, the all in, he's a billionaire, right? His position in GameStop is 5 times 5, $25-30 million. It's not a huge investment, just to be, let's just say that at the forefront here, right? He's not piling a billion big GameStop not even $1 billion market cap, right? Nevertheless, this is what I mean, though. He's talking up the importance of what his next move's going to be. Maybe he cares. We talk about it in the stream. Sometimes you just need a management team or even some investors who care, and that will really change how I view the company in the stock itself, because so many teams out here and so many stocks out there, the management team don't give it. They're not really trying. They're just paying themselves, and they're not really trying to do anything. You know what I mean? But so I pay attention to that stuff. Tree founder also bucked tradition by not establishing a so-called family office for his trades. Oh, but now such private firms have served as the go-to methods for wealthy individual. Oh, so look at, he's really, shit, okay. Cohen is sticking to his guns and riding out his portfolio's rough patch, telling Bloomberg, I don't want to swing for a single. Yet the 34-year-old billionaire emphasized that his strategy is not for the faint of heart. You need to have temper. Yeah. Was that it? Oh, shit. Okay, let's get back to the other one. Okay, it's hard enough, so what would cause us to go to the other one? Since exiting, figuring out what he wants to do post-Chewy. We know he's making a couple of investments in Apple, and he has a checklist of questions a startup direct-to-consumer brand needs to be able to... Is he looking for... That's what I mean. When I see this from a guy like this, I think he's looking for the next startup firm that he wants to invest in and make it big. That's usually how this goes, right? You go from one big startup to the next big startup. Usually don't see them go... This is why it's big news, right? Because you usually don't see them going into what many consider a dying brick-and-mortar retailer. It effectively becomes a turnaround, you know what I mean? Usually they're in the next... Maybe that's what I mean. It's such a small investment for him, it might just be just a small thing that he's working on. It's not the thing. He's also been thinking a lot about the valuable business lessons he learned from his father. Yep. We just saw that article. Back then, Cohen used the 97 Bezos letter to Amazon shareholders as a roadmap for how to grow Chewy. Comments about the need to scale, achieve market leadership, and to make bold bets. We knew we needed to be number one or that we would fail, he said. If we were number two, yep, okay. Chewy played by Amazon's rule for supply chain logistics and the convenience of shopping online, but added its differentiator, the old-fashioned customer service of a neighborhood pet store for its winning strategy. At the end of the day, we're really connecting with customers, and people are emotional beings, Cohen said. Chewy's handwritten holiday cards, pet portraits, right? That customer service. When PetSmart bought Chewy was the largest acquisition. Yep. Since leaving Chewy, Cohen has been looking at investments, both public and private, but hasn't yet seen or come up with an idea as good as Chewy. Sometimes the best strategy is just to be patient and wait for that. Oh, this guy, dude. Is he a value investor? But he shared these thoughts about how a new e-commerce idea might help compete. How a new e-commerce idea might help compete in Amazon world. Amazon has chinks in its armor. Oh, is this more about Amazon, this article? Its user interface is dated. That's true about Amazon. Amazon's user interface. It's kind of swag, don't you think? I'm not that. I don't know. With the flood of third-party merchandise and sponsored ads pushing aside organic search results, those are weaknesses a competitor can exploit. Advertising plan for sells something the customer connects with emotionally. Gaming. That's what comes to my mind. All right, let's keep going. Chewy's genius was connecting with pet owners on their level, mirroring their obsessive devotion to their pets and recognizing they were pet parents, not owners. Yep. Cohen was an obsessed pet parent when he started Chewy. He saw how customers were responding to online shoe seller Zappos and I thought, wow, if customers can go bananas for shoes online, imagine if we could do it for pet customers who are as fanatical and obsessed with their pets like I am. Emotion is great, but you also need existing demand. Gaming. An emotional connection and a differentiated niche isn't enough unless there's existing demand, right? That's what I mean. So that's like that's the thing. Being the major, I'm going to keep tying it back to GameStop. I have to. That's the whole point of doing this, right? Gaming's thriving. Gaming is thriving. There's the whole physical disc and blah blah blah. It's just the tired argument, which is legitimate, but we've heard it so much. But gaming itself, and being the only brick and mortar retailer dedicated to it, and they also, I keep on saying brick and mortar retail, they have an online presence. Being the only, can I just say the only major retailer dedicated to gaming? I should frame it like that. But their brick and mortar space, which is what could come in handy because they have all these experience and stuff. But anyway, the demand isn't waning. It's not like people don't want gaming products generally. Maybe physical products, that specific demand is declining, but that in theory could be replaced by a new type of gaming product or gaming experience. This is what people seem to be missing, or many people seem to be. Not enough people are talking about, I should say. Like, it could be replaced by a new type of gaming thing, and I think people would flock to a retailer dedicated to that online and in store. Anyway, okay. There's a lot of startups where they're differentiated, but they're not really existing demand, right? Sure, you want a direct-to-consumer relationship, but does the consumer want one with you? But everyone is trying to build direct-to-consumer brands because it's easy to do and because the barriers to entry are such that anyone can create a widget and sell it direct-to-consumer. But I think you need to be really mindful of whether or not it makes sense for the consumer or whether you should sell on Amazon or for pet products or Chewy because it's the most convenient for the customer. Everyone wants to have a direct-to-consumer relationship, but does Cohen's also been thinking about how the life and business lessons from his father. We just read that article. Talent board member, his father had a heavy influence on his decisions. He knew our financials. Okay. Be involved in every aspect of the business. Empathy, we just saw this in the other article too. Sell the customer the product that will make them the happiest. Cohen's father frequently used the example of 2 trucks of merchandise arriving at a warehouse. One truck will make you more money, but the other will make the customer happier. The answer, he said, is always pick the truck that will make the customer happier. Cohen said his father was never one to relax, and he always needed to be out. And he said he always needed to be doing something to feel a sense of accomplishment. Cohen says he is the same way, and right now he's trying to figure out what the next something will be for him. This was January 2020. Okay. I look at almost everything that comes to me, but I say no to 99.9% of it. That was true at Chewy too. 99.9%. I mean, these are his words, and it could be hyperbole, but he says no to 99.9%, and he said yes to GameStop. Against all the haters. Holy shit. Cheers. As Warren Buffett says, wait, did he quote Warren Buffett? As Warren Buffett says, the difference between successful and really successful people is really successful people say no all the time. Right. Buffett does. He says that all the time. But if you're a startup entrepreneur, Ryan Cohen asks, wants some advice on how to go up against Amazon, you probably should say yes. Okay. So he probably does mostly mean that he's looking for the next major startup idea and he's saying no to everything. But nevertheless, you see he's saying no to all this shit and he knows his shit and he's saying yes to GameStop. That's the takeaway, right? So we just needed a little bit of a better feel for his background and stuff, just so we know what we're not up against, but what we're dealing with here. Like, is this as potentially meaningful as I think it could be? I'm gonna watch all these later. See, when I'm dialed into a position, I watch and I read everything that I possibly can, but I just can't do it now. What are we? We're an hour in. We spent an hour on this shit. Oh, jeez. I hope you care about GameStop. Oh shit. Play the vids. I don't care. Derek. All right. I know. Was only two? Was there two of us? I don't even know if Concurrent Views. Is that all? Is that all? But the two? Is it the two of us in here? Is there a third? Are there three people in here? I don't know. We're having a party. You know, Friday night party. Let's do it. Hey, let me know. Can you hear this if I do play one? It seems like we could watch one, right? Which one should we watch? Yahoo, CNBC. Let's do CNBC, I guess. That's the one. Can you hear that? Oh, shit. You might not be able to hear it because it's not going to the microphone.
Ryan, congratulations.
Thank you. I'm glad to be here.
So you're not a shareholder in Chewy.
No.
But I would imagine you have a lot of feelings about seeing this company that you built starting in 2011 go public today.
It's a very, very emotional day. It's humbling.
Not really, yeah.
That capital is going to go back to paying down debt at PetSmart versus.
What I probably could do. I think what I can do is I can. Oh, you can. Oh, because you're a little bit behind. I blasted it. Hold on.
It's a capital-light business, and it requires very little to engender its growth. And so, the company's gone from $200 million in sales in 2014 to $3.5 billion in sales in 2018, and it's burned through about $140 million, all of which has gone into investing in new customer acquisition and future fulfillment centers. And so it really is a function of how quickly you scale the company. But at any point, we could, ratchet it down the marketing spend and bid and profitable. But for us, the strategy has really always been about scale and market leadership and building a really big business. And the governor of growth has always been free cash flow. And so we've always been very disciplined about that.
You yourself had a nice exit a couple years ago, got some free cash. Are you investing in IPOs this year?
Not any yet.
Another question specifically about the pet business. Omnichannel is big right now, blending physical and digital retail. Given what's happening with premium brands and treating pets like people, if you were doing that, would you do it in urban areas or would you do it kind of in the suburban strip malls where the Petcos and PetSmarts have been in the past?
I really think it's all about creating an experience for the customers. And so if you're going to, invest in physical stores, it really needs to be focused on delivering an experience where people want to bring their pets into the store. And so I think it depends on the category, but to the extent that retailers are focusing on creating an amazing in-store experience, then I think omnichannel strategy can make a lot of sense.
You sold for $3.3 and you got a $14 billion market cap today. Did you not sell for enough, or has there been enough growth since then to validate today's market cap?
Yeah, I mean, I think, we were, at the time, we were running a dual track process, and it felt like a fair deal to us at the time. It worked out really well for the team at Chewy. It worked out really well for the shareholders at Chewy, and I'm glad to see that it's working out well for PetSmart, so I'm very happy.
I love the story. Your original idea was jewelry.
Yes.
Right? And what switched you to pets, and are you glad you didn't go into online jewelry?
Well, yeah, I mean, we weren't very passionate about the space. I was at a neighborhood pet store one day with Tylee, my poodle, and it was an amazing experience. And so I had an epiphany that if I could really recreate that experience, but do it online and at scale, and you think about all the small things we've been doing since day one, right? The handwritten holiday cards and the pet portraits and the flowers, and it's really bringing a face to e-commerce. And so we were able to differentiate ourselves and build a really big business. And the vision since the beginning is really to build the largest pet retailer in the world. And it's been an incredible journey.
A lot of folks like to point to the ill-fated Pets.com in the late 90s, early aughts. I mean, that was the example out there, the biggest example out there, I think, when you were starting the company in 2011. Why'd you still move forward with this model?
I'm contrarian, and so I think that created really white space where you didn't have that many people going after the category, and so it created a big opportunity for us. Having said that, it was a low-margin business that required getting to scale in order to make the economics work.
How much does fast delivery matter in this category? Because you got heavy bags of pet food often. People know when they're getting close to the bottom of one, and for Chewy, this subscription delivery has been important. Does it really need to be that fast?
Yeah, I mean, I personally think so. I think within e-commerce today, it's really table stakes to perfect that flywheel of fast shipping, being competitively priced, and then having the selection. And we really differentiated ourselves by being the category experts and, you know, really bringing a face to e-commerce. And really, at the end of the day, we just happen to sell pet products. Frankly, I think, you know, if you're in the business of delighting your customers, I think that, you know, you could be very successful, and I think we would have been successful, frankly, in any category.
Talk about a little what you know about, say, my pet.
Yeah.
You probably know how much he eats per day,
Yeah.
and thus when it's time to order more food, when his next checkup is due. Is that all wrapped up into various algorithms you have back home?
Yeah, absolutely. But I think that, you know, we try to create an experience that's really frictionless. And so whether it's the one-page checkout or just all of those things, we don't want to inundate you. We figure if we deliver an amazing experience, you'll come back to us. And then we go and we do all of those small things that, you know, really create that wow experience. And you tell your friends and family, like, this is the best experience. This is where I need to shop.
So it's not a shower of notifications and taps on the shoulder.
Exactly.
Right? You're
Exactly.
looking for the consumer to touch back themselves.
Totally. Exactly.
I want to go back to the delivery piece of this for a minute, because one of the things I found fascinating in reading about the history of the company is the fact that you actually built out fulfillment centers.
Yeah.
A lot of e-commerce companies actually outsource to third-party logistics companies. It's been a big opportunity, obviously, for Amazon, XPO, UPS, FedEx, etc. Why did you go down that route, and how does that set up the company for future scale?
It really is hard to scale to, you know, the vision since day one was to build a multi-billion-dollar business. And so we weren't experts in fulfillment in the beginning. We were using a 3PL. It wasn't scalable, and so we had to become experts. We had to make it our core competency, and we brought fulfillment in-house in early 2014, and we never looked back. And today, when you think about fulfillment at Chewy, it's, you know, world-class operations. We've got 7 fulfillment centers.
What part of this business is sensitive to the economy? Do people, I mean, they're not going to stop buying food for their pet, but do they buy more expensive food or maybe more treats when the economy is good and then scale back? How does that work?
I think we've really have the tailwinds of just the shift from offline to online, and then, you know, the humanization of pets and the, you know, the market moving up and average selling price moving up. And so, you know, if you look even during the Great Recession, the industry grew, and it's a $70 billion TAM today that's growing at, you know, roughly 3 to 5%. I think the last thing people typically are going to cut back on, even during a recession, is their pets. And I think what's even more durable is really the consumable part of the business, which makes up a big chunk of Chewy's revenue.
Oh shit! That was. Oh, can I want to play back that one part. Hold on one sec. Where was it? Right here? I was almost gonna fast forward.
Is back towards operations at Chewy. What do you think about that?
Yeah, I mean, I can't speak to exactly the capital structure, but what I will say is
Another question specifically about the pet business. Omnichannel is big right now, blending physical and digital retail. Given what's happening with premium brands and treating pets like people, if you were doing that, would you do it in urban areas, or would you do it kind of in the suburban strip malls where the Petcos and PetSmarts have been in the past?
I really think it's all about creating an experience for the customers. And so if you're gonna, you know, invest in physical stores, it really needs to be focused on delivering an experience where people want to bring their pets into the store. And so I think it depends on the category, but to the extent that retailers are focusing on creating an amazing in-store experience, then I think omni-channel strategy can make a lot of sense.
There you go. There you go. Oh, we guessed right on which video to watch, huh? That's it. That's it. I couldn't be any more, not optimistic. I couldn't be any more bullish. I don't know what your thoughts on this. Wasn't that exactly what you wanted to hear? It almost sounded like he was talking about GameStop. Holy shit. I know it's confirmation bias, right? I'm hearing what I want to hear, right? Because I got a big position in GameStop. But even still, even objectively, we can say the in-store experience, if you're going to invest in brick-and-mortar stores, I mean, come on. That's the same shit. And I mean, that's the history of Chewy, right? But to actually say this in the one damn video we pulled up to just learn a little bit more about this guy, and we hear that line, as opposed to just, you know what I mean? Like, we're trying to read articles and read press releases and stuff, but to just hear him come out and say what it is we're hoping he could contribute to GameStop. Boom. Boom. Doesn't mean they're going to pull it off, right? This is the whole thing with GameStop. Nothing these videos we talk about and the HESTA and permit get involved. Like, these are just... It could work. It doesn't say it's definitely going to work, but this seems to me a good addition to the team of investors. To you know what I mean? Like assume you'd agree with that, Derek. But nevertheless, it doesn't mean they couldn't clash. They still could. But this, as far as a new person jumping on board, and it's look at. I mean, he's being interviewed by all these folks too. He seems to have a good reputation, and plus he's a multi-billionaire, so that always helps. People are gonna listen. And especially. This is why I'm super curious. Like, he invested in Apple and he invested in Wells Fargo. That even was a headline's kind of funny, right? But they're following his publicly traded equity investments. Like, no offense to this guy, but who cares? You bought Apple and you bought Wells Fargo. It doesn't seem to me that big of a deal. But they care because he's hot shit. People care about what he's doing. And he buys a couple of stocks and he's got a number of headlines written about him. That's like, holy shit, he's got their attention. Props to you, man. And because you're obviously watching this stream. And but he keeps on saying how he's looking for his next best thing. He says no to 99.9% of anything. That's very important. So it's important. It's like, is this? It's not the one, right? Because he has so much capital. I'm doing the math right? $5 per share times 6 million. He's invested about 30 million, which is a pittance of his total net worth. But we see no other filings for RC Ventures. I can't find anything else, and it's such a huge stake. People are going to be talking about this next week, right? I mean, this is going to. Plus, with the short interest and everything, I don't think this guy can change the narrative by himself. Can he? I don't know. I don't think so. But maybe his word holds so much more weight than management team. I hate to say that because it's kind of ridiculous that we would even be in a position that could be true. Here's a management team legit turning around the business and then activist investors involved for years. Management team's been here for 18 months. Preparing, they refresh the board and everything like that. How could they listen to anyone else besides you? But maybe, dude. I mean, this type of market, I don't know. We don't need to watch the other ones because that was what I was looking for. Like that was exactly what I was not hoping to look for, but like it just pertains to what we were talking about. So we're probably gonna hear a lot of the same stuff. People are talking about Chewy and the brick and mortar stuff, but he probably elaborates. There's a whole bunch of them too, so this is great. Should we watch one more, Eric? Which one would we go for, though? Yahoo Finance? How long are they? Oh, $3.49? We could do that. We do that?
The online pet retailer Chewy had a pretty spectacular stock market debut. But today, the stock...
Thank you for having me.
Now, I know it's been a little over a year since you stepped down as CEO.
Yes.
The stock, like I said, had a great start. It seems like some of that enthusiasm is fading. Do you think Wall Street's not getting the Chewy story right?
Yeah, I mean, I can't comment on the stock price, but what I will say is this is a business that's gone from 200 million to 3.5 billion in sales over the past 5 years. It's burned through roughly about $140 million in free cash flow, and it's continuing to grow. And so we have deferred profitability in the short term to maximize shareholder value over the long term.
How sustainable is that model?
I mean, the company really could have been profitable many years ago had we really ratcheted down marketing spend. And so we've made an intentional decision to really invest in scale and market leadership and build a much larger business.
Now, in the last earnings report, we saw that Chewy's growth rate was actually slashed in half year over year. Some investors are worried that perhaps the company's already peaked as the founder of this company. What's your thoughts on that?
Yeah, I mean, I can't comment specifically on that. What I will say is that it's a $70 billion TAM. Chewy's a $3.5 billion business, and I think we've really sowed the seeds and created a foundation that's very scalable and capable of being a much larger business. So it'll really be up to the management team to decide how quickly they decide to scale, but it's it's early days in terms of its overall online penetration.
There's been some talk out there, I know you've seen it, comparing Chewy to Pets.com, really the poster child of the tech bubble back in 2000. There are some similarities, not profitable yet, holding off on profits as it tries to beef up volume. Other than that, though, is that a fair comparison, do you think?
Yeah, I mean, I think that is an absolute crazy comparison. I think there's really nothing in common between those two businesses. You look at Pets.com, that was a business at the time it went public, was doing $6 million in sales. Its product cost was $13 million. Chewy is doing about $3.5 billion in sales, and it's burned through roughly $140 million of free cash flow. So comparing a $6 million to $3.5 billion business, one with strong underlying profitability, really is not a fair comparison.
It is a crowded space, though. How do you differentiate, right? I mean, everybody's out there looking for the best price. It seems like lots of places, Amazon, the least of which, is able to offer convenience as well.
Yeah, I would say that, the strategy from the beginning is really replicating the experience I had in the neighborhood pet store, but doing it online and doing it at scale. And so, doing those small things like the handwritten holiday cards and the flowers and the pet portraits, really showing our customers we care about them, we care about them, we care about their pets, and we never want them to dream of shopping anywhere else for their pet products. And so pet customers are fanatical. That's the ecosystem that we've built. That's really the foundation and the soul of the company. And being focused on this category is a huge differentiator against some of our other competitors.
You founded this company in 2011 at the age of 26. You said you went to 100 different investors. They all said no.
Yeah.
Thank goodness you stuck to it. What's your number one piece of advice for entrepreneurs watching this right now?
Don't give up. I mean, I wasn't going to take no for an answer. And so finally I found someone that was willing to invest in me. But I could have stopped after 20 or 30 and, reworked my business plan or gone home. But that really wasn't, my MO. I was determined to build the largest pet retailer in the world. And I wasn't going to stop until I found someone that was going to invest. And so just keep on going. Eventually you'll find someone.
This is great. This is great. All right, this one was listed first. I thought maybe he listed it first I thought this one was more informative for our sake. But shit, that's it. That's I think it's just funny that I mean, maybe I'd heard of this guy, but not the level that I do now, just because I'm not really dealing with these types of companies, right? But now I hadn't heard of him. I didn't know that much about him, and now I'm like, oh, this is a perfect fit for GameStop, right? Much more. So I did my best to read about was it Donald Foss, and Donald Foss didn't have anywhere near the. I think he's a bit older too, so. Or his businesses were older. So when you're a tech type person and you're having recent success, I think people want you. They want to have more interviews and asking you more questions and stuff like that. So this guy's more front and center. And but anyway, this is just a huge pickup for GameStop and for GameStop shareholders, I think. And it was up after hours, wasn't it? I mean, who cares? Who cares if it's up after hours? But he's got to talk about that. Because if he does get interviewed, you know what I wanted to check. I like to. Did you see this video? The whole time he's talking, I got the chart up, moving tick by tick. That's investing. This is what people think investing is. Give me a break. And the other thing that was in this too was they talk about the IPOs. Revolve's in the Roaring Kitty portfolio. Where was it? Where were they doing that? Right here. Yeah. It's since come. I don't know. So I wanted to see when this was. When was this? That was it's June last year. Okay, right after they were going. Okay. Yeah, is this it? This is my small percentage of the portfolio. Blah blah blah. Is this his next? This is what I think we can change. It looks like this is it. If I'm wrong about that, let me know. But this is it. There's nothing else on his Wikipedia page. There's no other filings. Look at all these articles too. You know what I mean? Bloomberg. Here we go. Oh, that's the Bloomberg one. Did I skip that article? What happened? What? I didn't mention it. Bloomberg, here we go. This is a June 2020. June 2020. All that's going on in the world, and Bloomberg's. I mean, this is Bloomberg. I don't know. Yeah, but it's Bloomberg. Who cares? Ryan Cohen sunk virtually all of his new fortune in only 2 stocks. Co-funded. He plowed virtually all of it. He declines to specify the amount in just 2 stocks. This is exactly the kind of thing. When I find things, I have a lot of conviction. I go all in. He says he has no real estate beyond the Florida home he lives in zero stakes in hedge funds, private equity, or VC funds. Whoa, isn't that kind of rare? I think that's rare. Isn't like everyone like dabbling in this stuff? He says he's never done a private investment deal. Holy shit! This is June 2020. That's got to be weird, right? I think that's weird. Weird. I don't mean weird in a negative way. I know that word has a negative connotation, but like, I mean, I'm a weirdo, right? It's weird. You don't see, I think like successful tech entrepreneurs. I just feel like they're involved with everything. He says he's never done a private investment deal. He's been driving the same car for years, and he's lived in the same house since 2013. He sounds like a value investor, doesn't he? Talk about being contrarian. Talk about free cash flows. He quote Warren Buffett. Seems like a bright guy. I mean, he clearly is, right? There's multi-billionaire. Started up the company from scratch. I try to keep my life as simple as possible, so I'm not really a family office person. He's referring to the private. Damn, this is good, right? Bloomberg 2020 asked him about it, what he's going to do. He says, referring to the private companies that the ultra-wealthy often establish to manage their investments and personal affairs. That's bad news for wealth managers who generate hefty profits, selling products, blah, 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 blah. If Cohen had met with a financial advisor, he almost certainly would have tried to steer him well away from his all-in allocation toward a diversified portfolio. It's down to underlying facts, says Bernstein. There's almost no evidence of skill in security election. Well, I hope that's not true. Look at this. Oh, I beg to differ. His research shows that 70% of the companies that make up the S&P will underperform the average. Oh, jeez. Okay. Then again, if you do perform, you'll probably... Okay, we'll get back to thing. What is this? This is about... Come on, back to Cohen. Fortunately for Cohen, the value of his Apple shares have jumped 120% over the same time period. When did he invest in them? Did they say? Oh, here we go. Cohen's wealth may give him more wiggle room, but the performance of Wells Fargo show... when he amped up his position in the bank in the second quarter of 2017, the shares were trading at around... Oh, that hasn't worked out well. Cohen says his average cost basis is 46. Oh, that's bad, ain't it? Holy Toledo. For now. Could bounce back, but bummer. Today they're worth about $32, dragged down by the sales scandal that involved employees. Yeah, fortunately for Cohen, the value of his Apple shares have jumped. Yeah, I mean, if he was in Apple 2017, that's a quadrillion market cap now, right? Well, we'll get to Tesla, right? Although I think Tesla might have been red today. Who gives a shit? Okay, based on the price performance of those two stocks, the total value of his portfolio would have scarcely budged since he sold Chewy. Cohen says portfolio, which... Oh, okay. Cohen uses the word conviction a lot. Conviction. Says it's something he learned from his father, who ran a glass... Wow, his father had a big impact on him, huh? That's great. Who ran Montreal. He taught me how to block the noise from the masses, how to block the noise from how to have a point of view and have conviction and not waver. Zerk. And went to job and taught him the principle. Oh, his father was his mentor and close advisor while he was building Chewy and taught him the principles of stock analysis, which he took to heart when selecting his stocks. His father died suddenly. Oh, bummer. He frequently quotes the famed investor Warren Buffett, which may not be a surprise given that Wells Fargo and Apple are major Buffett holdings. Wow. GameStop. I don't believe it's a Buffett holding. Correct me if I'm wrong, but I don't think Berkshire Hathaway is an investor in GameStop. So that one's not in the same classification as these other two, of course, right? I'm not sure it's fully... Cohen says he likes Apple because its products command intense customer loyalty. Right, absolutely. I mean, it's a tremendous business model. I'm not sure it's fully appreciated. Defending Wells Fargo is a greater test of his self-professed contrarian learnings. It's a smaller share of his holdings. His bet on Apple is about 26%. Okay. Can you believe there's a whole article about his two picks? You know what I mean? It's not crazy. It's crazy. Declined to comment on the bank's 2018 scandals. Yeah, Cohen sees both companies as consumer businesses. Okay, Cohen sees both companies as consumer businesses, a type of industry he understands from building Chewy. The online retailer is famous for such over-the-top gestures. Wow, we're seeing the same stuff over and again. This is what happens with these types of success stories, right? Where it's the same. Because the journalists or the interviewers, they want to hear about it for their own piece because they know people. They're like, people are curious about this. Then you start seeing the same things over and over again. He likens his He likens his obsessive focus on building Chewy to his approach to stock. I don't want to swing for a single. He's going for a 10-bagger. What's the upside for GameStop? Someone was it Derek? Someone asked, what's that upside potential on a short squeeze? Or forget the short squeeze. I mean, the short squeeze is so difficult to forecast. But like, for an actual business model change, if there was something really there, and let's say this guy's got a good idea, and they actually do become the go-to place for gaming experiences, and people want to buy their games there, you know what I mean? Like, if this is a place people want to buy their stuff there, right? I'm not saying you necessarily send on birthday cards or custom portraits of their pets, but maybe, I don't know, custom portraits of your favorite gaming character or something. I'm shoehorning in an analogy here, but what I'm getting at is, if it becomes like the go-to place, people want to shop there, and you actually change it, blah, 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 then it's 10-bagger. I mean, it could be 10-bagger, it could be way more than that, because then you're dealing with a whole different animal. You look at the legacy historical free cash flows as to what the product sales might get, but then it's a completely different analysis. You need to analyze it in a whole different light. I actually wouldn't even have much confidence in my ability to value it because I know so little about that future path. I lean on the historical path to protect the downside. But this future path, it would be difficult for someone like me to analyze. But it could be easy for someone like him to illustrate or talk about or to cause people to envision it, which is so important for a position for a company like GameStop in its current position, where it's just that sentiment is weighing on it so heavily. So anyway, if he's looking for a big win with GameStop, I could envision him actually getting it. Doesn't mean he necessarily will, but you can envision it. It's possible. He wouldn't, however, recommend his investment approach to everyone. Neither would I, right? None of these things you see, none of this Roaring Kitty channel's recommendations, right? He wouldn't, however, recommend his. You need to have the temperament to block the noise. Well, that's important. Sometimes it feels like a roller coaster. You get inured to the roller coaster nature of it over time. For most investors, the low-cost index fund is more prudent. That's true. But Cohen says he's committed to his stock picks and has no regrets. Wow, he's really talking about his stock picks, huh? It's funny that he's talking more about stock picks. Does this seem weird to anyone? He's talking more about his stock picks, like publicly, like picking stocks, as opposed to the next startup you're gonna invest in. I feel like every time I see stuff like this, it's like, oh, what's the next startup you're gonna invest in? And he's almost talking like more of like a portfolio manager. Like, yeah, I'm just looking for the right thing. And I'm partly saying that, yes, because he took a position in GameStop. But even still, the way this whole article is written, it's not like what's the next startup win you're going for that you're gonna start up yourself or blah blah blah. He's coming into his stock picks and has no regrets. Well, maybe one. The execution of Amazon is just phenomenal, he says. At Chewy, we couldn't have staked out a bigger competitor if we tried. Did Cohen think about buying a stock? I should have. I wish I did. Oh, in Amazon. Okay, that's June. So this is it. GameStop is the next one. Oh, that's huge. It's huge. I think it's huge. We'll see. Oh, damn. I was adding this week, too, so that worked out well. I mean, I've been saying it during the stream, how it's been kind of getting ahead of me a little bit. I mean, I've been adding for so long, you know what I mean? But then I talked about how I was adding in July, but I was even still adding on this pickup here. I haven't added above 5, so I haven't. Did I? No, I did. I might have. What was it? Wednesday, I think I added to some calls or something. Now that everything's so damn expensive, but the equity still looks like not for everybody. This isn't a recommendation, right? But as far as my assumptions go, the equity, even at $5 or whatever the market cap is right now, still looks like a steal. It's a difficult case to make more for the options these days, time-limited options and all that. But the equity, it seems like it seems cheap. That's why it's such a big position in the Roaring Kitty portfolio. But all right, damn. Anything else to think about here? No other filings or anything, right? You imagine something gets filed? You can file till like 8 o'clock or something. Damn, he didn't say anything specific about GameStop in there. That's too bad. What was this part? That was him. Oh, this is sick. Are there any articles out about it yet? No, not yet. There will be some. How about Twitter? What are people saying on Twitter? But did I post the live stream? I did, right? Yeah. A lot of noise. All right, so people chatting about it. I'm just trying to see if there's more than this, right? 2 hours ago, that was 2 hours of 6:24. All right, so people chatting about it. After hour stuff. No big CVC. Fintel, hey. Oh, I could just follow them, I guess. I don't want. No, I'd rather just check. I want to check on my time. You know what I mean? All right. So no. What I'm looking for is just the. I mean, it's a Friday night. It's Friday night, right? Who's still working Friday night? Huh? Crazy people like us. You know what I mean? That's when you can get some good work done now. But I was just checking to see if one of the news, what do you call them? The news sites we're talking about. But you have to think that they're going to talk about this next week. You know what I mean? Especially this article. This is nuts. Looking for did he talk about the next big one? He didn't talk about it in this one, but we saw that other article. Nothing. All right. I mean, lots of people talking about, which is good. It's people talking about it, you know. But I'm going to be more curious to see. Wow, lots of people. Okay, so then we just got it ahead of it. Who was the first one? Who talked about it first? Let's see. Who wins? I'm just curious now. Who was the first to vote? It wasn't Fintel, was it? Okay, this one. Trade on the Wire just says 13D. All right, it looks like some bots. Who's the bots and Fintel? Okay, Hodor. Hey, Hodor. Hodor. Okay. And then Jared. Okay, just curious. All right, keep your eyes peeled next week. Next time we have the live stream. Wow, we're halfway through the stream. That's okay. This was worth it because do I keep adding? Shit, I'm glad I added this week, you know? Like, we'll see, though. I mean, I'm talking it up, but I don't mean like it's going to pop on Monday. It's not like that. I'm talking more about, I'm thinking about that narrative shift, you know what I mean? And I think this has the potential to get that conversation started. And then just imagine if I don't want to say if they beat on earnings, but if it's a good earnings release, they announce like a sale leaseback, and just forget it if they announce share repurchases. I don't think that they will. But if they don't share repurchases and then they come up with an actual plan and it's like really bullish and people are like, holy shit, talk about a consequential 2-week period. Forget about it. I don't even know what to say. But so next week will be like, at this point, it's safe to say there's probably not going to be any news releases before earnings. Like I think that now it seems like they're going to dump everything, like the sale leaseback. I mean, that's the big item as far as we know. But like a strategy around the consoles, are we going to get something more palpable? You'd think. Also, isn't that the same? I think that is the day they're going to announce the pre-orders or establish the pre-orders or talk about the price. When do we get the price for the consoles? You know, that's got to be soon, right? Geez, it's almost September. I could have sworn that stuff gets released in August. But so maybe they're trying to time it right. So it could be. I've been talking about a busy couple of months, but hell, it could be a busy couple of weeks. But you don't bet on something like that. You just talk about more of that longer-term narrative shift. You hope for that, though. Shit. Maybe we'll get a big article about this. Oh, wow. Someone's going to write about this. I mean, it's low-hanging fruit to shit on me and to shit on Heston Permit and maybe even Michael Burry, apparently. I can't believe people... I just mean like people on social media and stuff, and like, oh, Burry's crazy or so. You even see some articles out there, but like, let's see someone shit on this guy, Ryan Cohen. You know what I mean? Like, I'd like to see. I just want to see what that looks like. Like, what are you gonna say to this guy? You think he doesn't know? You think you know e-commerce better than him or omni-channel experiences and all that stuff? Like, you're literally interviewing him and asking about his stock picks, and then he makes a pick in a stock that that everyone shits on, right? Then it's like it's harder to critique. It's harder to critique stuff like that. So I'd be super curious. When we get that article, I think we will. Maybe he even talks about it too. Maybe he wants to be interviewed on it, or maybe he's still building his position and he's going to be hush hush for a bit. Maybe he wanted to get in before earnings. There's so many different narratives. You don't want to go down that path. You can drive yourself crazy. Shit. Okay. Now what? 8:30. I think I'm gonna need another beer in the stream. You know? Damn. How's the chart looking? Tell me that don't look semi-bullish, huh? Looks bullish. It broke 550 today, right? First time it broke. No, oh yeah, it got above there last week. That's right. Oh yeah, how much did he buy on last Friday? What was the date last Friday? August 21st. Not much. Remember it was like it went up like suddenly and like rapidly and went kind of high. All right, not that much. It wasn't him. He contributed to it, but plus the timing of the purchases. If he did it in one big huge chunk, but who cares? Oh wow. I mean, we know he was. Now I'm trying to think about like, do you make any moves based on this? I mean, we already got the position, right? It's a big position. Did I update? I think I updated this today. All right, we'll do this stuff next, right? It's 17% of the portfolio. Yeah, that's updated. I think it's 17%. It was going up, you know. But now I'm like, am I more bullish now? I hate to say that. It's just one, but then I think, all right. So how it's sentiment wise, this is undeniably positive. For actually changing the thesis or having a positive impact on the thesis, what do we know about him? We know that he interviews well and he says a lot of the right things. We know he was successful with Chewy, right? But that's just one company. Will it actually? And he talks about Amazon a lot. He says like a lot of the right things. Said he's knowledgeable. It doesn't mean he will necessarily succeed with GameStop, but as a GameStop shareholder, I'd like to see him. But it doesn't mean it'll work out. But he think it increases the chances. Oh, I saw. So talk about Tesla, right? So let me just a little bit of a tangent here. What Tesla do today? I was down a little bit. Look at this. Look at this shit. You believe this? People were shorting this. Are they still short? Is it? Oh, what's the short interest on this now? They still have heavy short. Okay. Short percent of float, 8 point. Okay, yeah, for some. Okay, it used to be a big thing, right? People shorting Tesla, but not anymore. But what people were saying was like questionable valuation this whole time for years. Since this breakout 10 years ago, not 10 years ago. This breakout. This was a big breakout, by the way. I was too much of a noob back then to understand. Big breakout right here. Boom. Oh man, how much is that up? I should be able to do that in my head. 40x. Damn. The me of today would buy this, you know? Picking up on the sentiment. I don't know that I would hold this whole time. Almost certainly would not have. But this looks really bullish, right? That's what the books say. But there's been question marks about Tesla's viability, long-term viability, and so forth, whether or not it can actually sustain, what the free cash flow actually is, and all that stuff, right? But Musk does a really good job of selling himself, selling Tesla, attracting capital. We're talking about this guy, Ryan Cohen, attracting capital. You know what I mean? Like someone who can just tell. Jeez, fell off my chair there. Someone who can tell the right story, right? To get people to invest in you, the person. And Elon Musk, say what you want about a lot of stuff, but like he does a good job at that. He's attracted significant amounts of capital despite all these question marks. And then there's a case to be made that like you do it long enough. Now we're going on 7 solid years, 8 years. I mean, I forget when Tesla was founded, but you do it for so long that you will it to happen, that you attract so much significant capital that even if it was just a story, I'm not saying it was, I don't have strong opinions on this, but even if it was just a story you tell, a really compelling story that was maybe a house of cards. Again, I'm not saying that's the case here. I don't care. But if that were the case, but you tell such a compelling story and that you do successfully raise so much capital, the price keeps going up, blah, 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 that you can make it happen because you have all this capital and you can actually make it happen. Maybe it doesn't end up being as valuable as you were talking about it being, but you can envision that happening. Now, it can also still collapse. So, like maybe there's not enough capital that you can attract to prevent it from falling apart. I'm just using, maybe Tesla's the wrong song to use because people think that I like making a prediction. I'm not. So where was I going with this? Talk about GameStop, like just the importance of talking a big game, the importance of narrative. And so something like a Tesla, the narrative has been critical because they don't have any free cash flow for so damn long, so long that the story has been so critical this whole time. And Musk so far has crushed that story. Doesn't mean it's going to work out. Doesn't mean it's going to keep growing. Blah, blah, blah. But his ability to attract capital has been hugely important. And so when you come to how did I go off on this tangent? I was talking about GameStop and just the ability to attract capital and interest and stuff like that. It's super important, and someone like a Ryan Cohen can help with that. Maybe not to the degree that Elon Musk can or something like that, but that type of stuff is important. And I mentioned this in one of the videos or one of the streams. Like people were knocking Hester and Permit for they're trying to trigger a short squeeze or something like that. They're just in it for a quick run up or something like that. And that's kind of ridiculous, right? Because they have a larger investment stake in GameStop than the management team. George Sherman has a pretty good sized stake himself, but that's still smaller than Hester and Permit. They've been invested for a longer period of time than this management team. Like they're as invested in this as anybody. Everyone's hoping. I mean, it would be nice to get a short squeeze, but you don't know that they'd sell out. They're not necessarily trying to sell out right quick. Plus, they're directors now, right? But if you can get it's a good thing to get the stock price higher, even if a short squeeze accelerates that, because a rising stock price can help you attract capital. You need a compelling narrative, of course. That's like the foundation of it. Here's what we're going to do long term. But then, you get a GameStop stock looks like terrible, right? It's a hard pitch to make when your stock price looks like this, because everyone looks at this is what they see. Like for a lot of people, this is the analysis they're doing. And even the past year, it's just flat. So you kind of need a tailwind here for the price to start rising. And then if it's a short squeeze, then people are talking about you in a positive light. And that in itself helps you attract capital. And then if you, I'm not saying that they're going to issue equity or anything like that, but if you did raise capital, if maybe they issue debt and at a really attractive rate, looking out 2 years from now, I know they just did some high yield debt, but then you can take that debt and reshape and you can invest it. And so it's narrative is important for so many damn reasons, but that's one thing. And a higher stock price would be helpful for that. Anyway, long ass tangent on that one. Let me close out some shit, or else I'm going to keep talking Chewy all day, for better or worse. I'll keep that up for later. I'll probably watch this stuff on my phone. Damn, that's sick. Okay. Look at this chart. God damn. Okay. Anything else? RC Ventures. Close out of that. You know what? Can we just start with? Let's just start with insider buying before we get to the days. It just because we already did like that. You know what's funny? I checked Open Insider first, and then I went to the. That's usually what I do. Fintel second. Oh, you know what I haven't been doing? Oh, it just dawned on me right now. Like when we're looking at a company, I'm an idiot. I have this shortcut. Oh, I lost it. Why did I lose it? Oh man. Oh, I gotta rebuild it. These did I lose? Cause I must have lost. When did I lose these? What I check this? If I type in a ticker, watch this. Do you know what I mean? And I do this. Oh, can I do it? Oh, I gotta redo it all. Sorry, but I can type in the ticker once, and then I click a button, and it opens 8 different web pages for me. And it opened Whale Wisdom, Open Insider, the Activist, SEC site, the chart. And so you see me typing in all this stuff, but really I should be using my damn thing. But it cleared it. All my saved bookmarks and stuff disappeared. Bummer. All right, whatever. I wasn't going to use right now, but nothing today. Another Avis thing. We just saw that the other day. Pacific ethanol. That thing's still alive. They do a reverse. Oh shit. Damn. This thing looked dead. This is bullish. Oh, I missed it. This is bullish. Remember ethanol? This is one of those ethanol. Remember we looked at GPRE, REGI, Rex, REX. This one was so small, I thought it was toast. What's corn doing? Wait, why is it going up? I mean, it was priced in the gutter. Maybe it's just a business. Oh, bummer. What's the market cap on that? I'd followed that for a while. It seemed like a super speculative play. Wow, that's not a bad market cap now. Ah, shit. Expands high quality alcohol production capacity. All right, I'll check that out later. Oh, I regret. Like so many times I looked at that and I never added it to my watch list. I always thought, it's total. Look at this chart. See what I mean? This is why the chart can be deceptive. But I should have added it for ethanol reasons. You know what I mean? Just as like a, what'd the bonds get down to? Plus the chart. You know what I mean? Like I would have bought. I'm not afraid to buy on just this chart. Look at this artwork. I'm not afraid to buy on that. This I would have bought right around here. Is this weekly too? And especially when it was holding up, so it sells off, then it bounces back up, sells off. Would have been nice if we were. This is why it's so important to track, because you might see it this time, but you're not sure. I'm not going to do it. Let's just pump the brakes. We've talked about this on the stream, right? And then I say, all right, let's just wait. Let's just see what happens. Let's just see what happens. And then it starts building a case of, all right, this is a new price level. And if this is the new price level, we can dabble in here because this is super bullish. Then it takes off. I've done that before, and it's successful for me. It's strictly technical analysis, what we're talking about right here. But then you have a fundamental story to go with it, and I've seen a lot of success. I've had a lot of success with it. But the importance, this is why I think there's an edge in tracking. Because I don't think people feel like doing it. It can be a lot of work at times. So that's why it's so important to streamline it, which is my goal for the stream. Which I'm not there. We're not there yet. I keep on saying that. But what would be really helpful is these charts. I want you should be able to see, and I know you can do this with other stock charting systems. You should be able to see 2 or 3 charts right next to each other at the same time. Like, it's kind of silly that with stock charts, if I upload a CSV, I can't see 3 charts. I need to do one by one. It slows down the process of screening based on charts. If you know anyone on stock charts, see if you can convince them to make a change. I should reach out to them again. Anyway, let's keep that. Well, how much? This wasn't a big buy, was it? 167? Damn. From the co-president and the co-CEO? Oh, man. Anyone talk? Oh, there's a couple of them. Oh, shit. Oh, is it too late? We might not be too late. See what I just bought, I've been buying PRTY because of Clifford Sosa in there. Kaiser Sose. But it's annoying when you buy after a stock's already gone 10 bagger. You know what I mean? Over 10 bagger. This, you know how difficult it would have been for you to buy right here? It would have been so difficult. And I remember I was saying this to myself, and I still didn't buy enough of them. But you make the most money when when everything's selling off, right? You step into this crazy uncertainty. You're not going to have a lot of conviction. I'm not saying you would have gone heavy into this, and you just accept that a good chunk of them are going to go bankrupt. They're gonna. It's okay. And then you're talking 10 and 15 baggers. Like, it just so makes up for the bankrupt ones. It's ridiculous. And the way you sleep at night is by diversifying, right? That's unless you really dialed into a company. Like, for something like this, I don't know if I could ever have the conviction that I do, because as far as I remember, now I got to look it up. I have to wait till you see these fundamentals. It's gonna look. Another 10 bagger one. I'm not gonna call this a missed opportunity though, because it really wasn't. I'd followed it for years. Because it went from 350 to $20 in a short period of time, and that caught my attention. Just a couple of months, and I've been following it for like the past 5 years. And look at this. You see what I mean? You can understand. At least you can sympathize or empathize. And ever since then, that's when it caught my attention. And ever since then, down, a little bit of a blip, down. And I in my mind, I remember thinking like, oh, it's done. It's done. This looks awful. There's no way I could get involved unless things started turning around. And even right now, it still may head south, right? But at least you see a change in the trend. Oh, this is the monthly chart too. Look at this. The longer the time frame, the more meaningful the signal. You could have bought in at 62 cents right there. You know what I mean? Oh, damn. This is why you do the monthly charts too and the weekly charts, because I only want to do the weekly charts. We'll get into a schedule with that. I was thinking we'd do it today, but then that GameStop news happened. Look at this. And even if you bought right there, you're up. They're not all like this, but you would have got a quick 5-bagger, 8-bagger, whatever you got in. You know what I mean? It's a change, and this is what I think there's something to technical analysis, is that sometimes it's a manifestation of changing fundamentals underneath the surface. I don't even know. We'd have to dig it. If I dug in and I saw there is something actually here changing, like we see with GameStop, right? There's clearly things that are unfolding in the right way. And if we dug in here and we thought, if we saw this is why it's good for sure. I say I use technical analysis for screening, for tracking, just watching what's going. How much time do we look at charts here? I mean, during this stream, right? It's ridiculous. And you know I'm a deep value fundamental investor, but it catches your attention. You just see something and it catches your attention. Then you go digging in. You're like, oh shit, the chart is telegraphing to me that something positive is unfolding. And then we would have maybe we wouldn't have. Maybe we would have dug in and been like, it's not that compelling. Still, I still might take a position though, a small one, just because the chart looks so interesting. But I wouldn't go heavy unless the fundamental events were substantiating what you saw with the chart. That's why it's helpful to use both, I think. It's the tracking. That's like doing both and tracking everything. That's tough. But boy, yeah, is it? I got a little bit of a support here. Look at this. Breaking above. This is the monthly too, so this is meaningful. Breaking above 4. You might have limited downside going to the charts. Is there anyone talking about it? That was some good insider buying. This isn't a big company. 250 million or something? 250,000? Here you go. Plus 14% on insider buying. And what? There you go. Oh, today. Oh, was it up today? Son of a. No, 9%. That's not that bad. So they got 15 million. Oh, how much have they been buying? I see a couple of oh shit. Nathan Gilbert has bought almost 500,000. Kohler's only at 167 though. And then an extra 40. And they haven't. Oh, they bought in June too. Oh shit. Oh, and they bought it. Yeah, okay. 2, 4, 6, 7. That's no joke. But then there was this big sale here at 5. How'd they do that at 5? Did the price ever reach 5? Oh yeah. Oh, look at that timely sale. It's a tad concerning. See this? Christopher Wright sold at $5. Sold a third of his stake. Maybe he's just tired of. Maybe he's tired of the stock price going. I mean, you can't fault someone for selling. And they're kind of making up for it. Is there still anyone talking about this? Hey, Courage and Conviction. When did he get? He got it on August 13th. Recognize that name. All right. Okay. Oh, okay. All right. Okay. Got something timely here. Oh, a lot of comments on it. Oh, he wrote one on August 12th too. Oh, $9 price. Oh, I'm not going to get involved for a double. Double. I was hoping. All right, check out PEX. Chart, insider buying, seeking alpha article. And who owns it? Oh, it brought me to the bottom. I was waiting for it to load. It was already there. Renaissance. They own everything. No one. Who's Greg Engels? No one. All right. Oh, and let me just check the fundamentals real quick. I don't want to dig into it right now. I kind of just want to. Oh, I did it again. See how many times I do this? I ruined it. Oh, I gotta remake this. I'll remake. Like, there's a whole bunch of stuff now. This is good though. Like, I built out a whole bunch of this stuff, and I was trying to craft it for the stream and everything like that, so you could see things cleaner. And but I didn't really, like I said, like when I said kicking off the stream on August 3rd or whatever it was, I was really just starting to get back into it again. And now I'm seeing some things that are broken or things that could be improved. Not huge things, but like things that just irk me as when you keep on doing the same thing over and over again. I'm like, oh, I gotta fix this. Let's check it out. Oh, they got real revenues though. $1 billion? Holy hell, that's way more than I would have thought. I like the market cap, right? 230. I mean, I liked it more when it was 30 million market cap. I just thought it was toast. No bonds. Shit. Oh, is this just who is this guy? Is this another person that I might have overlapping? He's got nothing else. That's his only position from 2014. Source date. Whatever. Oh, I didn't mean to close that out. Oh, that's because that's the only one. Okay. Fundamentals. Back to it. Conditional formatting's taking a while. Oh, look at all that red. Ah, my eyes. See what I see? Now you see what I saw back then. You know, this is what I mean. It's not a missed opportunity. I don't feel that bad. It looked like shit. Although the $1 billion revenues, though. I did not remember that. Let me mention that. Shit. Oh, wow. I was trading a big discount to tangible book. Ah, oh, bummer. But look at this. Look at it. Look, you can't even get EBITDA positive. You know what I mean? What am I supposed to do with this? I can't. You don't even have positive EBITDA. You know what I mean? You always talk about like I need something. I need something to go off of. You can't even give me EBITDA. Could you give me operating cash flow? Nothing. Well, maybe. Oh, this is quarterly. Sorry, I told you I was going to do that, but I'm lazy. Why did they change this? Oh. I can solve this easily. I can solve this easily because what I can do is it would take me like 5 minutes to solve. Because what I would do is I would say, I just add this to each thing. I'm just being lazy. Yeah, watch this. Time me. Let's do it. Give me 1 minute. Boom. This is for the ad hoc one. This is the thing, is because I got so many of these spreadsheets that I was kind of like, I'm like, oh, I can't do it for each one, but I could at least do it for the ad hoc one and for number one, company report number one, which is the ones when I check off things. The life of the individual investor. See what I'm talking about? This shit, huh? You think Ryan Cohen? You think Ryan Cohen has to be editing formulas in spreadsheets at 9 p.m. on a Friday? Nah, not Ryan Cohen, kid. Though we already did that one. Already did that one. Did I do it in under a minute? Probably not. That seemed a little bit longer. 90 seconds. Sorry about that. All right. It's still pretty bloody, though. All right, so what do we have? Put yourself in March. You know what I mean? You have that ugly, ugly chart. We had no bond prices readily available. I could have tried to look into it a little bit more. You traded at a fraction of tangible book, but you got some debt. I would have had to check out the balance sheet. No earnings. At one point, they had 2 years of earnings. You know what I mean? It's just 2 years. You had 2 years of earnings. And that was during a very bullish year for ethanol producers, I believe. They did have some operating cash flow, though. Shit. I definitely didn't even pull up the fundamentals. That's what's frustrating. There was too much going on. I'm like, you can't pull up the fundamentals. I also didn't have my check boxes. This, I would have made my life so much easier. That's the thing. When I was, the amount of work I was doing in March and April and stuff, I'm like, this is what's most important. This is what I need. If to go through this, I need it to be streamlined even more. And of course, it could be even streamlined in order of magnitude more. But even what I have right now would have been so much more helpful back then. Because just to check this, checkbox, clear it out, check more. And then I got four of these reports. So I could do 40 companies simultaneously. Check, and then go look them up. And I didn't have this, but maybe I would have checked up. Probably not, though. I feel like I wrote them off. But look, revenues, legit revenues, $1 billion. Operating cash flow. I don't know if it was positive through Q1. This is through June 30th, but positive 2 out of the past 3 years. That's not free cash flow, right? That's not my point. When you're dealing in really dodgy companies like this, forget your clean free cash flow, discounted free cash flow analysis. Just forget that shit, because you don't have that as an option. And they say this so many times, and people just write it up. You're like, well, I can't deal in this. And I'm just like, oh, well, that's where there's tremendous opportunity. This is legit where you get 10 baggers right here. This is where it happens. You just need to accept some like volatility and risk, and you got to diversify in that regard. Unless you're super dialed in. This is what I mean. I can only be, I don't know how so. I can understand why people have super concentrated portfolios, because I can only be super dialed in into a handful of companies at a time, where you're tracking everything. As an individual investor, you can only be, I mean, super dialed in, like reading everything, watching everything, tracking every move. I should even be better about tracking the top 10 positions of the Roaring Kitty portfolio. Actually, the reason I'm not is because the ones that have the most upside tend to be some of the smaller positions that I'm slowly building into. Do you know what I mean? So that's why I've been trying to cut back on the positions. Oh, I got the cash position up, by the way. 5%. Not bad. Got it up 5% this week. %18 on energy, 16% on materials. Yeah, 5% is okay. I think I want to keep raising that cash just a touch, or keep reallocating the capital. We'll see. Okay. So I just want to see if I saw anything else. Man, this too. Positive CFO, couple years. Anyway, so yeah, so what was I just like? You just get a couple of these promising characteristics. They didn't have any insider buying though. You know what I mean? Like if they had the insider buying back then, shit, I probably would have bought. You know what I mean? Like I didn't have enough. It's pretty clear. Yeah. As I've gained more and more experience, it's pretty clear what I'm willing to dabble in, what gets my attention, what's a deal breaker, what's not, what's the tipping point. If they had insider buying, that I almost certainly would have pulled up, but they didn't, right? Okay. I feel a little bit better. And so then they didn't start buying till oh shit, they had a little bit. See how small this was? So even in June, they were buying in June, but look, it was so small. See what I mean? Why wasn't Kohler buying? What were they waiting for? You know what I mean? Maybe they needed to be. Maybe they needed their company to prove to them too that there's something here. You know what I mean? So I'm not knocking them. I'm just observing. What the hell took you so long? Sometimes they legit can't make a transaction because it's like a blackout period or they're in negotiations or something like that. But I see these look like so small. These might have been related to compensation packages or something. See how like it's almost like were they open market purchases? It says they're open market purchases, but if we looked into them, I don't care. Well, you know what? Now I'm curious. Sorry, I have to for educational reasons, right? For educational reasons. Let's look at so $1,000. Come on, there's no way this is an open market purchase. There's no footnote? What is this? Transaction code. You can, if you're ever curious about these and you're looking up these, like I forget now, but you can like Google transaction code on Form 4, then you can figure out what that P means. Let's do it right now. Who gives a shit? Look at this. Open market or private purchase of non-derivative or derivative security. Well, shit. Oh, I can't explain that then. You know what I mean? Like, who buys $1,000? Like, maybe he has a personal reason for doing it. Like, maybe sometimes they're buying it for a family member, buying it in a trust or something. But there's no footnote. That's what's kind of weird. Is there's no footnote. They're just like, he was just buying $1,000, and it's kind of weird. Owner form, that's direct. D is direct. I know that. A is acquired. How about the other one? What changed since then? Corn prices. What changed? So let's think about what changed since June. There maybe business changed, right? Now they're performing better. We just saw a beat on Seeking Alpha or something, didn't we? They were tossed 15 million. 15 million is not that big. We know they're a 200 plus million market cap. So what changed? We know corn prices. We just looked that up. That's the only thing that changed recently. But still, that's their input cost, is it not? What the hell do they do exactly? See, they get grouped as like oil and gas, refining and marketing, which, yeah, I guess. But I don't. Produces and markets low-carbon renewable fuels and alcohol products in the United States. The company operates in two segments, production and marketing. Produces and markets ethanol and co-products. Yep. So usual stuff, right? Ethanol transportation. What's unique about them relative? Is there anything unique about them relative to the other ethanol producers? So somewhat similar. Oh, that's really coming down, huh? This looked ugly. Remember that one? Pulling back a little bit, but this one is Okay. Hey, what's lumber doing? We'll get to this. But just curious. Oh, big down day. Oh, it opened above 800. Okay. All right. Okay. Too bad they didn't buy it March. Bummer. I probably would have took a small position in them. I mean, you saw how many positions I had, right? There's not much that would have held me back on that. I didn't have any ethanol producers in the portfolio. I don't think. Man, if Courage and Conviction's article said he has like a price point of like $20 or a value of $20, I might have dug into this more right now, but $9? Anything else look good in here? You know what I mean? That would have been, this would have been a good addition to the portfolio too, because trade. I mean, a super discounted tangible book, right? You're seeing this for energy companies, right? But it's nice to let me buy some other deep discounted stocks trading well below book, well below revenues. But that's not an energy. You know what I mean? This is energy, I guess, but still, it's a little bit of a different type of energy company. Now it's above book value. All right, I guess that's about it. But positive, I'm seeing positive, simple free cash flow. We'd have to pull up the financial statements, but I don't. You know what? Can we just do it real quick for the balance sheet? I don't want to pull up the cash flow. I get it. I guess if this looks super strong or something. Current assets 131, total liabilities 286. Long-term debt? Long-term debt 95. Doesn't seem that bad. That's it? Any current debt? Oh, current debt 96. Okay. So twice. All right, so they got some inventories, cash. It's all current. It's all inventory. Oh, they got some fixed assets right there. I mean, what they're actually using to produce, right? That has real value. For now, that's the question, right? This is the risk with the industry, is that if they're no longer, if the industry is no longer subsidized, which I think it is now for the foreseeable future, how much will people actually pay for these assets? Okay, let's keep moving. You know what? I think I might get them. What time is it? 9? I think I might go get another beer. What do you think? Should I go get one more? I'm kind of feeling like it. You know, like we're like just getting, now it's 9, right? But we're like just getting started with the actual usual routine. Oh, sorry. That's right. We started with this. Oh, I saw this. He was buying more. Every damn time, huh? I skipped a day. Okay, now he's slowing down. 24, 25, 26, 27. Okay, just curious. Kind of popped back a little bit, didn't it? Slowing down. How about the weekly? Weekly is important here. Because that's looking kind of rough. Still looks bullish. I think, when's after hours end? 8? Okay, so that's at 560. Okay, close. Let's keep going. I saw it. Is this new? GCI? Yeah, because we were just talking about that on Wednesday? Starting to buy again? Trade date. Oh, no. Maybe we did talk about that on Wednesday. No, filed yesterday, so we didn't. I don't know about this. Oh, I did it again. Stupid. I'll pull that up. Let's take a peek. They got some strong key houses, but it's newspapers. Newspapers doing okay in this environment. Plus, they're super leveraged. All right, I don't see much else. Kind of a quiet path. It's kind of a quiet. I mean, summertime kind of quiet. Last couple of weeks in August too. People are on vacation. Not many people paying attention or doing stuff. I don't know what is volume. Volume's usually lower. I don't see anything. Okay. All right, now let's get into this. Let's get into our daily. Emerging markets, Latin 40, huh? Not even sure what that is. I actually call it the iShares Latin America 40. Okay. This is looking good. Oh, why was this up today? Can Seeking Alpha help us with this too? Because that'd be sick. They do ETFs? Look at see, yeah, nothing since February. But they might have one for Brazil. That's a closely followed one. All right, so what were interest rates doing today? What were bond prices doing? Let me see the. Okay, first the price. We said price is down 1.3, but let me see this 7 to 10 year. This is ETF. And yesterday, the 27th. Oh, that was yesterday. Oh, so it was a big drop. The bond ETF, which is an increase in the yields. Okay. Let's back this out. They talk about Powell. Oh, because yesterday was the day that Powell actually had the Jerome Powell had that the press conference where he's talking about. Some people are saying it was a bit more hawkish than they were expecting, talking about inflationary risks and how they'd step in without hesitation and stuff. And so people were like, "Oh, maybe inflation's a real thing." I mean, that's not enough to go off of, but interesting. How about the longer term ones? 20 plus? Shit, look at that, huh? You can expect these, right? The longer duration, they're going to fall a bit more. Look at the RSI, too. So huge run up at the beginning that year, overbought. Look at that. Look at this action, and right, this is just. I think I've mentioned this. Like this is crazy action. You saw it in the U.S. dollar too. I think. Up, and then down this much. Like that's crazy action for this type of an ETF, right? In just a couple of weeks. Wow, look how much that's up, huh? Bond bulls crushing it. Oh, this is bearish, huh? Definitely a little bit bearish. This is daily. Let's back it up. Looks a little bit bearish. It's almost like one of those head and shoulder type things, but like inverted, but on its way. But on its way. Okay. All right, something to keep an eye on. I'm not totally convinced of. I mean, I'm invested in all these inflationary type assets, right? But I'm not totally convinced that it's actually coming. Is that the month? Oh, that's the weekly. Let's do monthly. Monthly, you're not seeing much, right? Let's see it. I mean, you need to step down next week or the week after. The next couple of weeks, people start taking that seriously. Yeah, okay. I heard some chatter about that. I'm glad we checked this. And then this is just the broad bond market. See it coming. Oh, when was the? Oh, early August, right? Okay. Kind of come down a little bit. I mean, we're talking for small moves here, right? What else would we like to check? Oh, U.S. dollar. Oh shit! Here you go. Oh shit. That looks bearish. Oh, I feel like we haven't checked up on this in a couple of weeks, huh? Oh, this is a monthly chart. Oh, it's bearish. Well, I didn't realize it was below. I'm gonna be checking up on closely, huh? I feel like we checked it maybe. I forget. The first stream would have been this week. So it was like kind of flatlining, but now it's like, oh, it's making a move, huh? It's making a move. This is bullish for hard assets and stuff, right? I mean, it makes sense. I think this is when we talked about it. When we talk about gold going up, you want to know what gold? You want to try to take a guess what gold's doing? Just look what the U.S. dollar's doing. So if you see U.S. dollar doing this, and you pop up gold, watch those past couple of months. Boom, 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 right? I mean, it's. But it's kind of describing people's risk appetite for paper assets to a degree. I mean, is there a better paper asset than the U.S. dollar? You know what I mean? Who's a better lender out there in the entire world? You know what I mean? This is why. Oh, Derek, thoughts on gold miners? Well, you know, that's not anymore. But top 5, one of my top 5 positions, one of the top 5 positions in the Ryan Cohen portfolio is a gold miner. I would say. How could I? Yeah, thoughts on gold miners. I have gold miners in the Rowan Kitty portfolio, right? There's a handful of them. If you want to see, let me pull them up right now, so you can at least see the names. Not recommendation, right? Blah blah blah. So I got New Gold. That's the top one. And then I got Sibanye Gold, which is Sibanye Stillwater, which they do have gold. They do have gold mines, but they have the palladium assets. That was a big reason. They have palladium mines. But gold too, and I feel like people forget that, and I think if gold takes off like it is, it's going to be an even bigger beneficiary of it than others. I have more than that. I am gold. That was one I added. I think someone recently just to build out that gold position. Yamana. I was surprised how small that position was. I guess that's it. So I am bullish on gold. Looking out, bullish on gold. The gold miners looking out a bit here, and you saw Buffett bought Barrick Gold. But more on like a multi-year play, kind of like what I'm seeing with natural gas right now. You probably see me talk up natural gas a bit. With gold, it's the same thing. Like we're in what I consider a bullish uptrend here, long-term thinking. So like this was the inflection point, and I did a good job buying up a whole bunch of gold assets. In fact, I bought calls on Barrick Gold, which is now a Buffett holding, right? And Anglo that ended up going like 40x, 50x, something crazy, because it turned out I timed them really right. But anyway, these were like obviously cheap, abundantly cheap, crazy cheap on a fundamental basis, but also the chart was like, all right, and it was like a multi-year downtrend, just like we're seeing with natural gas, right? It was like 5 years. They peaked in 2011 there, and it was like 5 years of every year. Like you're stupid if you own gold. And I was like, all right, this could be the inflection point. Then you got boom, 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 and then it came back down. And then once this happened, this was like kind of from a chart. Now I'm like looking at it from a technical analyst perspective. I'm like, all right, this trend is kind of taking hold. We didn't get close. The miners never got quite as cheap as they did back in 2016, but they were still somewhat cheap. And then I got really bullish when it broke 1,400. This is when it broke 1,400 this year. But the gold miners look really good right here. This was the time to buy gold miners. That's when I would say. This is why your question is a tough one, because my thoughts on gold miners right now are I'm not buying any of them. If that's what you're trying to get, like what do I think I'm like super bullish on them that you should be add them to the portfolio? No. The time to buy them was right here. I wasn't too dialed in right here. I'm assuming that they could have been good buys, but really I'm not so sure. Here it was a good time to buy that September, October, late 2018. It was like September, because Barrick Gold, their CEO was buying in September of 2018. I remember this because I remember thinking, oh man, he's making a statement here, and the miners were getting cheap again. Every once in a while, it goes in flows. They'll become cheap again. I'm talking like price to book, price to earnings and stuff. And then in the Barrick CEO, that guy, he times this shit really. We looked it up. He was buying in March of this year. Look it up. And so that late 2018 was a good time to buy. And then you had one more opportunity in 2019. They like sold off crazy in like May of last year or something. This was the time to buy. Right here, the miners themselves. This doesn't look that cheap, but let me just do GDX just for a sec. Oh, jeez. Man, they sold a bit more off. What about the juniors? Yeah, they almost got right back to where they were in 2018. That was what got my attention. And then when it broke above 1,400, then it's like, all right, now I'm bullish on a technical standpoint too. So if you're holding the oh no, I fell off gold. So you keep holding the gold miners until let that trend keep going. Let that trend keep going, and boom, 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 boom. And then there was another time to buy. It was in March of this year. I've said it a number of times on my videos and stuff, because I didn't get as aggressive as I should have. It was Monday morning, March 16th, and they were crazy cheap again. You see this quick sell off. It got but this is gold. But let me just see GDXJ. Watch this. Oh, I did it again. Sorry about that. They got right back. They got as cheap. This is GDXJ. They got as cheap as they've ever been. And I saw it, and I didn't get, it was just so much going on. I feel like everyone should get a pass at this. I couldn't keep up with everything. This was 16th. This is before, I mean, a lot was moving already. That Friday, too, thing was so crazy. But then I'm like, I couldn't catch up with stuff. This is the plight of the individual investor. I'm like, I couldn't keep up. And I'm like, holy shit, these prices. And then they kind of bounce back that day. And then you see, is this daily? This is weekly. And then you see it bounce back that week. But anyway, this was the time I was super bullish on the gold miners. I just wasn't acting fast enough. And now you're in a holding pattern of gold's super bullish right now, but the miners don't look super cheap. I know people are talking about it because Buffett bought Barrick and everything like that, but what I don't know what the thesis is for buying them right now. They don't look super cheap in a if the long-term secular outlook, you're looking 5 years, I can understand that thesis, but that's not how I roll. That's not how I invest. I invest on like when things are cheap or the trend is in my favor, blah blah blah. You get in a better feel for my style. But right now, my style, there's nothing to be buying. Like I bought that IM gold position just because I was kind of surprised how low my gold allocation was. It should have been a bit higher. I've just been so diversified. So now I'm in waiting. I think I mentioned on the gold. I'm all over the place on my typing. Don't drink and chart. You know what I mean? Now I'm kind of just waiting. I'd like, if I were going to add more to my gold, I kind of do. Maybe a lot of people are saying this too. I need it to pull back even more. I wanted to pull back on this RSI down to like 50 or something. I'm satisfied with my current allocation. I do wish it were more, but I'm not willing to overextend myself and buy at these prices because I don't know. I mean, we got the election coming up too. I'll tell you, maybe I apologize. I'm sure, I feel like I did mention this on the stream, but when I bought those gold miner options back in 2015, yeah, it was 2015. I bought them looking out a year and a half. So they weren't expiring in January 2016. They were expiring January 2017. So at the time, I was buying them just because gold miners were selling off, and they just looked super cheap, and everyone was. It was August of 2015. It was a crazy time, and I had them. They were up like 20x, 40x. I kind of forget what they were, but then I had them like going into the election. So here we are, 4 years later, and I'm like, you know what? I better keep more money on the table because this election is kind of nuts, and all the uncertainty going around, and gold could go up crazy, and so this was, when was this? This was right around this time period, like right here. It was like starting to go up, and I'm like, you know what? I think I'll keep some money on the table here. And as it turned out, it was the wrong move. What happened was that night when I think when they said that Trump had won the election, gold skyrocketed 5%, and then the next day it collapsed. Then it went boom, 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 and I'm like, oh, I messed up. And so there I was. I had everything right on the on my calls, which was fundamentals focused and sentiment based. Like people were really bearish on everything back in the day. And then I'm like, you know what? Maybe I'll just play the election here because it turned out to be the wrong decision. I felt so stupid after that. So I won't do it this time. Which it will work out. Watch gold take off to the moon, and I'll feel like, oh, I got it wrong. But I won't do it again because that's kind of against. I'm okay keeping some money on the table. I'm okay with some of my options expiring worthless. That happens to me all the time. But I kept too much on. I should have trimmed even more. I was thinking at the time to say nothing. This isn't. I don't want to get into politics on this channel. But I thought this is from an investment perspective, not an investment perspective, but an odds perspective. That the odds of Trump winning were higher than what was being priced in by the market, by the polls, and everything like that. That's all I'm saying. Like that, I thought that it was that the odds were higher, that he stood a better chance than people were talking about. To say nothing about politics, I'm not saying anything like that. I'm trying to read the news and stuff like that. I remember people like completely writing it off, and I'm like, oh, I think there's a higher chance than this of him at least going the distance. You know what I mean? And with that in mind, thinking that'd be a lot more uncertainty, maybe things would be like, what's going on? What if Trump wins? Like, we've never had a president like this before. What's going on? And so I kind of read that right, which is kind of cool. But then as it pertained to my investments, I had like backfired. I'm like, so that's the thing. It's one thing to like make an accurate forecast, some fundamental forecast, but what matters is what the price action is. This is why price matters. And now here we are again with Trump going for a re-election this time around, And gold shooting up again, but now earlier. But anyway, what I'm getting at is I don't know what the hell gold price is going to do over the next couple of years. I've heard the fundamental arguments, but now I'd say I'm more just leaning on the fundamentals and technicals. The sentiment seems a little bit overbought, you know what I mean? And I don't like to buy at those times. I will buy at those times, but I don't like to. And then now check out the RSI on the daily. This is getting kind of bearish. You know what I mean? This is weekly too. Is this weekly? This is looking kind of bearish. You know what I mean? Like. So I don't. So what's the allocation? 5%. Did I go over here? Gold 4.2%. I don't know. I'm okay with that. It should be higher than that. It should be like 6% or 8% by virtue of it rising. That's where I messed up. I messed up by not going heavier in March. But that's because everything was cheap. You know what I mean? Like in 2018, that August, September, October 2018, that was the time to be loading up on gold because it's not like there was a ton of stuff that was cheap. And then the market sold off in late 2018. And then last year in May and June, when it pulled back, that was the time to be adding because not everything was selling off. But then everything sold off in March, and I was, like I said, I was slow moving, but I was just more diversified. And so I didn't see as strong of a, relatively speaking, I wasn't as strongly bullish, I guess. You know what I mean? What I do is more important. I say a lot of stuff, but I try to reflect a little bit of introspection, think about what you were thinking about. And I guess in that light, I don't know, gold. How much are the miners up? Let's take Yamana, for example, because that's one I would have gone. See what I mean? Like, they're not up that much. They're not up that much. So then I see something like this. I think, who gives a shit? Who cares? I didn't. They're not up that much. Although I did new gold pretty well. I think my average cost basis is 75 cents on this one. You know what I mean? So I was a little bit slow moving there. And then what I was thinking too is because I think this trend, I think this trend is still intact. So I think this inflection point here, I think it's still intact for now. This multi-year bull trend, this is what I'm trying to say with natural gas, I think might be happening with natural gas. And with that in mind, I need to add on the pullback, but I will add on the pullback. Eventually, we may reach a point, and this is going to be what the question is this cycle over? But I don't think it is. Boom, boom, higher lows. You know what I mean? Higher low, the low, higher low, higher low, higher low. You know what I mean? Boom, 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 boom. It's very clean. This seems very clean to me. Gold trades very. So does Bitcoin. They trade very clean to technical analysis. This is why I'm glad I picked up the technical analysis. I still got a lot to learn, right? I'm not drawing lines all over the place. I'm like, but it seems like it's still intact. So I don't know. Look at that. They're only doubles. Yeah, a play on gold miners right now, or even gold, is just a bet on that, like the dollar. I mean, the dollar does look bearish, right? This is more like it's an asset play. It's like a macro play kinda. What if I do, let's do this. You got me curious. Let's do this. Industry filter. Let's do this right now. Circ. Okay, watch this. Clear them out. Clear them out. Clear them out. It's hard to yell. Okay, let me do gold. See, I gave myself shortcuts because I've done this so many times. I'm like, hey, just let me check off gold, check this out. So this is kind of cool. And then I'll do this because I ain't scrolling. Boom. Okay, so now we have all our gold miners. sorted by, in this case, by market cap. Oh, this is sick. I don't even think we've used this on the stream yet. This is dope. So based strictly on the fundamentals. First thing that sticks out to me is there ain't much conditional format going on. EBITDA to EV, 0.8, 0.4. All right, so that's, I mean, those are kind of nice. EBITDA. Seems like pretty cheap on that basis, huh? This is good too. I should have done this the other day when I was trying to look up gold miners. What was I doing? Yeah, I should have just done this. See new gold lower on there. Wow, there's some other ones I have in here. I forgot about these. Those must be super speculative, huh? The earnings yield. All right, so they're cheap on an earnings yield. What is it? 10%? Oh, 7%. 7.7% trailing 12 month probably. Look at the percent to 52-week high. They're all pretty close. Oh, they were up today. When was gold? Yeah, gold was up a little bit today. Well, you know what I'm kind of interested in doing is, oh, let me do this. Oh, this is sick. See this check bar? I was gonna go type in a whole bunch of tickers. Look at this. This is great. Boom, boom. We'll do Yamana. Boom. Is that the right market cap for Goldfields? It's not 11 billion, is it? Whoa, that's way bigger than I realized. Oh, I thought that was a smaller company. Shit. They merged? There was a merger, right? Oh, shit. All right. Let's go check out these fundamentals. What do you say? What do you say? All right, so just look. We'll just use gold. This is Barrick Gold. This is we say Buffett pick, but it's Berkshire Hathaway, right? Could have been anyone. Safe. Hey, how many times do you see this? How many times do you see this safe over here, huh? Never, never. When I'm pulling up a company. All right, so you're trading at 29 bucks. That sounds right. Tangible book $9, but this is after years of write downs and so forth. Earning $2. And the expectation would be that if that this trend is taking hold, that these increases are going to persist for quite a bit. You remember, look back in the day here, you can see they had paused, crushing it on the earnings front for years, for 5 years. It's taken a while to get back. Oh, that's not earnings. 2009, they should get it passed, but like every single year, and then they've been dealing with losses, and then they're finally turning a profit here. What's interesting too about gold miners, but all miners, right? One of their major costs are of production, energy prices, and energy prices are in the gutter. They're really cheap right now, so that's kind of it's a boost to earnings. Yeah, and then gold prices are rising, and they've been for years cutting down their costs. All right, now you got me thinking. Right, gold prices are right now rising to like all-time high. Did we get all-time high? Yeah, we're at all-time high, right? Silver, I know we're not there, but gold, we got them. Yeah, we got it. Yeah, it was there. In this whole time, they've been cutting costs. This is what I'm saying with natural gas too, is cutting costs for years on and years, and they're still throwing off losses. And what happens is the cycle finally turns, and sometimes in a big way. Oh, right, they issued this share issuance because they merged with Gold Corp, right? Is this them, Gold Corp? Or was that Newmont? Whatever. We know it was. Oh no, it was Randgold. Yeah. Newmont merged with Gold Corp. Right, so it's a different business model. Shit, that's right. Now you're getting close to not a duopoly or oligopoly. It's not even oligopoly because there's a number of companies, but the big ones. If they're increasing scale, yeah, you'd think that there might be some. I hate to use this word, but synergies, right? And For use synergies for a gold mine, is that a thing? Can you actually? It seems like I shouldn't be able to say that. I don't know. I'd need to read more about it, I guess. What are people saying? I mean, I get it. It's more of a style play, you know what I mean? Like, on what basis does this look like, of all the companies you've seen us looking at during the stream and stuff, it doesn't look like, what does it look super cheap based on? Earnings, a 1 year of earnings? But that's the thing, that's historical earnings, blah, 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 blah. That if future earnings are $3 per share and $4 per share, then there's a case to be made that it's cheap. But even then, for something like Baracle, then a double. So what if we start getting into the smaller ones? What about let's look at Newmont's. Man, nothing's cheap though. So even operating cash flow. So forget earnings for just a second, but operating cash flow has been $1.50, and simple free cash flow is obviously going to be less. They're never great businesses, right? Although Berkshire's behind them. And then you look at net cash flows. It's just not classically cheap. You know what I mean? That doesn't mean you can't dabble or anything like that. I'm just saying. This is why it doesn't have my attention right now. I need something. Even rampant pessimism. You know what I mean? Which is hard to, what's the word? Like, put it into a number. Like people always try to do with risk, right? It's hard to put it into a number, but you can just feel it. You can feel it in the marketplace. And every once in a while, I feel it. And nowhere close to it right now because this is super bullish. So I don't have that going for it, and I can't find anything. I don't see anything here. Yamana's never really looked that cheap. Trades at. I'll tell you, these are all going to be super cheap if gold starts coming like feverish, like a fever pitch type thing, which can happen, right? That can happen with many asset classes. It could happen with Bitcoin. It could happen with gold. Then these are going to trade at multiples of book value, 5 times book value. In which case, these are all stupid cheap, right? Yamana's nowhere close to its previous high. And that was let's see. So the previous high would have been like 2011. So maybe 2 times. Maybe it was at 2 times book. Just about 2 times book, 2012. Of course, but now if book grows and so forth. So that's the thing. I can see a case for it. I mean, I got it 5%. I got it 4%. I got it 5%. But it's hard for me to add to that right here at these levels. And I get the thesis and stuff, but I would need to read an analysis that's super compelling. And a lot of the stuff I see out there I don't find particularly convincing. If you have anything, I'd take a look. But if it's just the usual case of the U.S. dollar collapsing, which is a legitimate, I'm not knocking that thesis. I just mean it's hard for me to bet a lot on something like that where these current prices are. Like, I'll buy into that thesis when the stock price pulls back down to here, something like that. So we'll revisit this on a pullback, which inevitably will come. That doesn't mean that maybe it will come when its stock price is much higher and stuff like that. But rarely is something super, super bullish for long periods of time. It happens, though. It happens. And again, I'm bullish. This trend still looks intact to me. I'm not saying I'm bearish on gold. I'm not. Good question. This is a good thing for me to be thinking about, too. And the only other thing I'd say is this is a big reason New Gold is as big of a position as it is. It makes no sense. It's borderline indefensible. But in one of my videos, when I was doing one of those long-ass spreadsheet videos on the channel, New Gold was like the top position. I'm like, oh shit. This is what I think people gonna do. Not that anyone's watching those videos, but you'd see if you saw my top position, you saw it was New Gold, you'd be like, what the hell kind of portfolio is this? But part of that reason is because I was so bullish on gold. I think I made those videos in like May or June, and New Gold had just doubled smartly. But it's because my added kicker for if gold does work out is I think New Gold will be one of the biggest winners. I think it could. Did I check it off? Come on. Shit. Where's New Gold? Right there. Because they're like it's a business turnaround, and they're a gold miner just like the other ones with real gold assets and like real gold mines. But they are suffering from like a business turnaround. They had to shut down mines and stuff like that. And I just thought if gold prices take off, number one, the value of their mines is going to go up quite a bit higher, but also it increases the chances they'll be able to successfully turn around. And so the stock price, it will need to be repriced in this new environment. And I think that's quite a bit higher But let's check out, like, maybe New Gold's still cheap. Then at least I hope it's cheap, because how am I going to defend my position if it's not? I would just say that part of the reason is I'm kind of making up for what I consider a somewhat smaller, like I said, I thought it was going to be 6-8% right now, somewhat smaller gold position by having a riskier gold position as my top one. Let's see what this looks like. Please be cheap, please be cheap, please be cheap. Oh, that was only through 2019, by the way. That was Yamana. I see, because these are Canadian companies. Damn. So I need an updated balance sheet. But so look at this. So it trades at like 1 times book value, which is something, and maybe updated book value could be higher. But and then you look at what historical book value was, which we could have done with Yamana. Yamana was like, what would we say, 8? What was Yamana? No, historical book value was 10, and it trades at 6 right now. So it's not that much higher. And there's stuff that's happened since then. I think they just sold like a say a royalty on their current mines, so it's not like the same business or anything like that. But I'm just looking at the numbers, just pointing stuff out. That's all. And I see after all these write-downs and stuff, there may have even been an asset sale in there, but based on the revenues, maybe not. Oh, they got their revenues back up. So you can see like what the mines may have been historically valued. But again, there's more nuance to this. I'm just pointing stuff out. And then not so much cheap on the EBITDA basis, right? I mean, you're talking 5 times EBITDA. Is anything lit up? Oh, the revenues is kind of lit up green. But yeah, 1 times tangible book. And then the operating cash flow, 39 cents, 161. Also, still not super cheap. I mean, I know it's lit up green right here. That's a 28% operating cash flow, but there's no simple free cash flow. It's all negative. This looks really bad, doesn't it? But turning positive. I guess that's my thought, is that it really doesn't look that super compelling at all. I'm happy it's worked out as well as it did. I kind of just knew the story, and it's just a gold play. It wasn't so much because it was like making up for my everything else. Is anything else here that stands out? Not really. The book value I like, and that's not even necessarily up to date. Let me just get this real quick. Now I do want to calculate book value. I haven't done it in a while. Oh, they sold the Blackwater project? Oh, let's just sell for $200 million. A gold stream on 8% of gold produced in the... Oh, shit. I think I should know that, huh? I'm always just thinking it's the just the gold price that's driving action. Oh yeah, didn't we just see his article? Rough session for New Gold on the right track. I don't know this person though. All right, can we just check the? Let me just check the balance sheet. What time we got? 9:40. Shit. We at least need to get through what happened today. All right, let me just. So now there's been a change though, because now their cash balance has changed. What did the balance sheet look like as of June 30th, though? Let's check that. Oh, this looks familiar. Didn't we look this up? I think we did. Oh, I should maybe dig back into this. No, yeah, Rainy River's the big one. Jeez, where's that balance sheet? Oh, they separate it out. This is dumb. Some of these companies do this. I have to go over to financial and other reports. Canadian companies. This is ridiculous that I have to do this for some of the holdings in the portfolio, that I can't even just pull up the balance sheet. Individual investor. Okay, here we go. Let's just check. It's again it's changed, but let's just see. Total equity 837, 838 divided by. Wait, is that all tangible? I think it is. I mean, I could have just looked for goodwill, but it's close enough. Now it's gone down $1.23, and so we think so. Book value actually has gone down since we last saw it in the since December 31st, 2019. But it could be that did they net a gain or anything, or get some cash? So we'll need to get an updated one. I've got to review New Gold story. Just make sure. It looks like it's still online. They're doing asset sales and stuff. You know what I mean? If you're actually executing the asset sales and stuff, it's like, all right, I'm just seeing that it's unfolding as they have a plan and it's coming to fruition. Doesn't mean it's going to work out, but it's kind of just in a holding position for gold prices. Okay, let's go. We at least got to see what the hell happened today. You know what I mean? Okay, boom. So Brazil, what's Brazil doing? Was it just emerging markets or anything? Oh, because this is partly because the U.S. dollar was down. These are tied at the hip too. So the Brazilian real was up too. Do I not have it there? I guess I don't have it there. Well, let's not get too fancy. Talk about Brazilian. I hope that is the real. S&P 500, 3,500? No shit. Look at this. That's bullish. That's bullish. It's super bullish too. Well, this is the daily. Back it up. I can't be looking at the S&P 500 on the daily, huh? Well, I didn't realize how overbought this was in January. Holy shit. It's got some work to do on the weekly, though. It's got some work to do. But on the daily, it's looking promising. Wow. That's bullish. How much time passed? 6 months? It's not that much time passed. Look at this. Is this month? Oh, that's weekly. See what I mean? Like, super bullish. Not quite as bullish, but then it kind of got interrupted by something major. How about the monthly? Bullish. Not as bullish. It's got some work to do. It's bullish, but not like rip your eyes out bullish. Just curious. And the NASDAQ? Jeez. What do you say? Same thing, though. Bullish, but it has some work to do, too. It could be on its way, though, based on these dailies. These dailies look good. All right, just curious. But an update today. Okay, silver up. Natural gas. What's natural gas hanging in there? 266, yeah. What are these doing? Kind of hanging in there. Kind of flatlining a bit. AR's hanging in there. Flatlining. SD, they're all flatlining. Just watching them. Soon it will be a good time to add to them. I don't know if I can add to them again, though, you know. One of these looked kind of bad. No, they all look the same. Okay. I thought there was one that was looking bad. I can't remember. Okay. And we saw lumber prices, oil services, oil catching a bid. Yeah, solar was looking good. Gold miners are up today. Yeah, 4%, 3%. What the hell did New Gold do? 3%. Oh, you know what's been crushing me? RFP. Oh, this. How many? I feel like I'm crying about this one every damn stream. It was never giving me another chance. Really sticking it to me. Second largest position in the portfolio. You know what I mean? What are you whining about, huh? It's just such a higher conviction play. I still keep waiting for the pullback. It could come. I felt this way before, and it came back to me. So, but pretty much a quiet day. Not much happening. Gold miners, tech up. Okay, copper. Oh, is copper up again today too? Jeez, those kind of track copper, huh? Nah, not much. Just in favor today, because of the U.S. dollar, in interest rates. These are inflation sensitive companies here. If inflation starts ramping up, these are going to be big beneficiaries. Oh, blockchain was up today. Marijuana, Nvidia, not much. Okay, check the positions. We'll be quick. We're doing good. Resolute. Why was it up 7% today? You know what I mean? That's what kick in the pants. I'm like, what the hell? It's like for weeks, for months, it did nothing. Now it's up 7% in a day with nothing's going on. I'm like, PBF, this was good, huh? I didn't add. I've been waiting. You know what I mean? It's kind of just doing it. Sold off. I think I trimmed or sold. No, I kept it on because I like the chart. The same chart, right? All these refiners. These are ads. You know, nah, but it's such a big position for me that I'm just waiting. I know I mentioned in the last stream, just waiting for a little bit of a breakout or something. I made a couple trades, but real small. It's whatever they were. I like sold out of a couple real small positions on things, just trying to get that position count down. And I forget what else. CVG, I was at 9% today. This one's never going to give me another chance. Look at this. Well, I think I even said that I didn't think that that would hold at the time. See how much of an idiot I am? Here you go. What more proof do you need? Boy, it's not going to come back. Damn. Well, if it give it more time, I may add. Same thing with RFP. It just won't slow down. That's what gets frustrating is when they don't slow down. You know what I mean? It's like just hit the brakes, flatline for a couple days, a couple weeks, and then I'll like the setup again. But I can't buy and it keeps going up. I'll just ride the wave. I've done it before, and it can be a good idea. It frustrates me too much when it goes against me. That's the value investor. I mean, I can't get away from it. Fossil was up 10%. How many times we were talking about Fossil all this? By the way, I forgot it's as big of a position it is. Like I made a note like, research Fossil, right? Dig into Fossil more because I guess I wanted even more. But then I'm like, oh, it's not just. It's an okay position. Now it's just a question of adding. Ah, it's looking okay though, huh? Was there news? That wasn't 10%. It's kind of been getting volatile. Nothing. It's looking good. You like to see the. I mean, it's not always bad that the stock starts getting attention and starts bumping up. You get a little bit frustrated because you wanted to add, right? But it's good because people are starting to pay attention to it. It's starting to get bid up a little bit. Like you're even starting to see it with GameStop right now. Of course, there's Ryan Cohen buying up all the damn shares from the rest of it. No, I'm just kidding. But like, it's good. It means it's getting some traction because then when it does pull back, it might not be as long of a, I don't know what I'm saying. Like, it just means it's starting to get attention because when something doesn't have any attention, like PBF right now, there's no one's really paying attention to this shit. It's been it's almost done nothing since the lows. It did look like it was starting to get some attention, but now it's been almost 3 months from this, and now it's not doing anything. But so anyway, it's good. People are starting to pay attention to Fossil again. CPS, this one was tough. A big reason this is as big as it is just because how high the stock price was. I'm not gonna lie. I mean, I've looked at the fundamentals. I don't have time right now, but this stock price was at $140 in 2018. You know what I mean? It sounds crazy, right? It sounds crazy that weigh on me, but it does. It's because I think other people pay attention to this stuff. Fair value, as I recall, significantly lower than this. Like well under 100. I even remember. Then it was leveraged and stuff, and then but I'm like, this will get people's attention. Sometimes you're just trying to guess what will get other people's attention, which I know that's not the investor way, that's not the Buffett way, but that's my way. Try to figure out what are people going to want in a year from now and how much upside do they think it has. That's the roaring kitty way. Jeez. CPS, okay. Boy, an update. Hey, this is looking good, huh? Timing this right. I've been added to it outside of there. I'm sure so this is not a bad size position for this portfolio, for the Roaring Kitty portfolio, but I've been added in other accounts. It's like a good set, not a big position, okay, but in other accounts I have many fewer positions than this, and so I'm a little bit more selective with the positions. But this one I've been added. I'm like, this guy's gonna be right, and it keeps going up. I timed it right. It was on this pullback, I think, or maybe on this. We'll see. Super risky stock and everything like that, but one of those following the breadcrumbs. Like I feel like he wouldn't be buying either unless he had another, at least a double, but probably a triple or a quadruple. Like maybe they're shooting for 10 or something. Sorry, I just closed that, but let's look at the historical price on this one. Which means there could be quite a bit more upside. Look at that chart, huh? Funky. Oh, Flex Shopper above $2. Good thing we added when we did. I think I doubled the position. Oh, this looks good. This looks good. Remember we got the insider buying tell. That was sick. Oh, this is looking good. Is it starting to get some attention? Do we add to it again? Do I add to it again? Oh shit. Good. Anyone talking about it? Ah. All right, just make a note of that. I mean, I don't know if I'm going to do anything with it. I just doubled it. Remember, it wasn't as compelling, but that's the one of those that has the growth. It has some growth potential. Maybe I might add one more time. I don't think it's a percenter though. Hey, there's Revolve. See, I talk about Revolve. I've been wanting to add. I made a note of that somewhere, didn't I? Yeah, it got a little bit ahead of itself. I might. I gotta start trimming the other ones though. I'm at 5% cash. I gotta. Oh, what's my Bitcoin doing? It's holding up there. All right, so kind of a green day today, huh? Oh, Western Digital popped 7% today. Shoot. Oh, what was the news there? Shit. Dell HP earnings drive computer. Damn. That was looking rough though, wasn't it? I was kind of just waiting to see what was going to happen and pop the wrong way. Let's keep an eye on it. It's not that. It's like it's only back to where it just dropped, which isn't that bullish. Plus, it was oversold. This still looks kind of bearish. I want to add. I'd park cash there. All right, 950. Keep going. GTE. Oh, again, it was up 13. Oh, because of the insider buying? Oh, did I pull it up? GCI. There it is. Number 7. Mumbo, number 7. Okay. Oh. Here we go. $2 billion in revenues. A lot of debt. Negative tangible book. Ugh. Boy, not as much cash flow as I remembered. 76 cents operating. Simple free cash flow, it's in 85 cents last year. Oh, that's not bad. But see, when you adjust for the debt, you see this adjusted share. That's what this is. Sorry, you can't see this. These rows right here, simple free cash flow. 3-year average divided by share adjusted. That's share adjusted. That's using these adjusted share counts based on this calculator up here. So if it says levered, then it goes boom, 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 calculates the new share count, and it's always usually an inflated share count. So it's not using 136. Sorry, it's not using 136 as the share count, but it's using this new figure of, 916. So that's super leveraged. It's almost 10x in the share count, you know. I need something else. That insider buying isn't enough. Hey, thank you. Yeah, thanks Derek, asking questions. I see people liking the stuff too. Thank you. I don't know. I think I need something else. That insider buying wasn't that compelling. There's a lot of leverage there. You know what I need to do is check the bonds. It's been a while since I checked the bonds. Oh, they gotta have something, right? There they are. Sometimes you gotta type out the whole name. It doesn't show up on the ticker. That's because it used to be Tegna. They remember they split the business or some shit. I don't remember. Those bonds look okay though, don't they? That looks better than I expected. It's a gap up, huh? A little bit of a gap up. It's kind of bullish. This looks kind of bullish, doesn't it? Shit. Look at this. Look at this very scientific. Look at this very scientific analysis. Like it's flawed. Like. Oh, that looks bullish though. Shit. I think I gotta add to this. Someone else bought it. Someone was talking about it. I remember thinking, you sure about that? Was it Leon Cooperman or something? I owned it. I mean, I'm not knocking him. I own it. It's in the portfolio. Standard General. Who was it? Ariel. They were a value shop. Someone. No, now we're getting into real small. Could have sworn someone talked about it. Fairpoint? Fairpoint. Is that? Wow. I'm going to say add to GCI. Chart. I mean, I know the story, and it doesn't look crazy compelling or anything like that, but it's super discounted. All those insiders are buying. Insider buying. It's a mess. Someone, come on. Anyone? Bearish. Oh, yeah, we just pulled this up the other day because I remember this. All right, but did I not make a note last time? Oh, yeah, I remember CDEV and GTL. We didn't get into that. Should be part of the stream, too. Just reviewing past notes, you know what I mean? Otherwise, I forget. I was up 13% today, huh? EVIX, Cracker. Everything's just kind of grew 5-10% today on a quiet day, too. Sick. Okay. Not much, not much. We're just seeing the same. PBD look kind of interesting, huh? Can you imagine if natural gas prices start taking off and I mean, and if people are forecasting, if they're thinking Trump too, I would think coal would start coming back in favor. That's what happened in 2016. Well, that was because there was an expectation that there might be a shortage of metallurgical coal at the time, and PBD's big in that. Of course, it ultimately went bankrupt, but I'm kind of surprised it's in the gutter as much as it is because of natural gas prices. Usually natural gas and coal, they tend to, I think people think it's going to go bankrupt, which it might. I was looking at those options, though. Today. Right here, January. $6. You're at 30 cents. You can get a 5-bagger out of that. Maybe even a 10-bagger. Because if it takes off, it flies. That's what I think. I think they could get to 10. So I was looking at those. Nothing got executed. Sometimes I'll put in orders and they don't get executed. Because I'm really a stickler. So a lot of them just expire. They don't get executed. But that was what I was looking at. I was thinking, and then it was up today, so that's not helping things. I like to buy on the down days. But it's probably going to go bankrupt. But I like this. I like the asymmetric. It's in the portfolio, but I think I'm down on it though. I timed the purchase wrong. Should I add more? Maybe I should add to them. Maybe I can't believe I'm gonna write this in 2020. Maybe small. I don't know. I would like I'd like a little bit more on it. No one holds it. Something else. Management, it's real quiet. This is one of those ones where it's quiet, and I think it's a bad thing. Whereas GameStop is quiet, I interpret it as a good thing. Damn. The quiet, I mean, there's not much news. Management's not saying anything. When I see it with speculative companies, I think, oh, this is bad news. All right, now we're in the now. Okay, let's get to the daily movers. So can we do this in 2 minutes? Okay, so we'll start with the downers. This is good. DXLG, Polyone. I gotta remove that. No time right now. I'm playing trying. Oh, this is the one I sold this today. I saw it was down 10%, and then some fund sold its. It was. I think it might have been almost a triple. I didn't catch it all because I wasn't paying attention, but I think I got a double on it, which is good. Like it just hit 20 a couple weeks ago, and I just wasn't paying attention. Stupid. I don't even know what it is. Oh, Tuesday. There you go. There's this bankrupt one. The time. Look at it. It's at 38 cents today. I think I own it somewhere. The time to buy it was when it dipped back down to 12. When it dipped to 12 cents, that was the time to buy it. I mistimed it because I bought it in the 20s, and too risky. It's a bank. The company's bankrupt, but it looks like a strong balance sheet. It's not in the portfolio, right? It's in the watch. Damn. Just a little bit. This is why it's important you don't want to pay up too much, because then when it sells off on you, especially when the company's already bankrupt, I'm like, shit, I got it wrong, or it's really hard to buy more on an average down. But if you buy really cheap, like I should have been buying at 15 cents. I messed that up because I thought it could be worth $1 or something. But 4-bagger on a bankrupt company, that's not good enough upside. You know what I mean? You need at least like a solid 5-bagger. But at 15 cents, and it has tangible book value of over $1, I thought that was the time. Sorry, I messed up. You got to get that purchase price right. So I wish I waited until it pulled back just a little bit more, and now I regret it. Because now, let's see what happens. It's only a couple of days, but all right, leg man. They're going to see a lot of up things today too. I mean, we can't get there. So any big, huge movers? Not much. It's all going to be about the same. Hey, Dave & Buster's is up 16%. What's that chart looking like? All right, things starting to some of these COVID plays turning up. Gannon was up 13. All right, well, no time to scream today. Screen. Not a crazy amount. Okay. Oh, Ryanair. Yeah, that one looked interesting. I've owned this before. It was a big winner for me back in the day. Oh, it's coming up quite a bit. That was one of those ones I didn't pull the trigger on. I didn't know if they were going to make it. I don't think it's in the portfolio, is it? Yeah, I bought it right here. As part of the basket purchases, and it got to be. I guess it was only a double. I thought it was more than that. Maybe I got a triple out of it. Probably not. I can't remember. Wow, are they going to survive? Where are those bond prices at? Shit. They got cellulose and stuff. I can't believe this. Anyone own it? No. Damn. Now it's a bit too late. I don't know if I like it at $3. I made the wrong call. That's all. Anyone buying? No one's buying. Boynton. Let's see if I get this right. Boynton is his name. Oh, sick. Oh, he did buy. Oh no. I'm not convinced this wasn't in the portfolio. What's the chart look like? Did it just not do anything and I sold out? Not always a good idea, but maybe. Maybe I did. I think I owned it. If I saw that insider buy, there's no way I would have passed on that. Shit. No buying since though. It's kind of weird. Now it's after 10. Don't tell YouTube. Please don't tell them I went after 10. Please, please. I don't want to lose the stream. Damn. All right, I'll keep an eye on that. I mean, because then there's a question of how lumber prices are impacting a business like that. You know what I mean? People start turning bullish on that type of a business. I got to pull up the fundamentals too. Shit, you know what? Now I got to do it right now. Sorry, I'm going long. Going long. I gotta. Sometimes I just gotta finish it. I know, I'm thinking about this. There's lots of things to do with the stream, and I'm trying to work. I've been saying that multiple times. How am I gonna work it out? What is it gonna be like? It's just sometimes you want to do different types of research. Sometimes it seems like it should be open ended though. Like Derek, you're asking good questions today, and like seems like it could be more open ended. And then some days it should be more company focused. Like these times we're doing a lot of tracking, which is good stuff during these streams. But diving deep into companies, we haven't done that too many times. But like that's an important part of research. But I guess right now I'm just trying to catch up on stuff. But like I'm making a lot of notes of like, hey, come back to this. But I haven't been. So that maybe there'd be streams dedicated to just doing a couple of diving deeper into companies. But it need for the audience sake, for your sake, you need to know what you're tuning into. You know what I mean? And I don't even know what I'm tuning into when I'm sitting down for the stream right now. But I'm looking at long-term thinking that there would be different streams for different types of experiences, different types of research, all stuff I'm doing. You know what I mean? But it needs to be communicated to you. You know, you tune in for 90 minutes of watching what's his name? Ryan Cohen videos. So I'll give it more thought. We'll see how things unfold. If it'd be helpful if GameStop really works out, because that could change things. All right, so let's see fundamentals. Did I get the right thing? Ryan. Okay. I just wanted to check the balance sheet, the book value real quick. Yeah, it's always super leveraged. You know what I mean? I bought it back in 2016. It was a spinoff. That's what it was. And it was a spinoff trading at a fraction of what book value would have been in the pro forma balance sheet. It was trading like a third of it. I'm like, this is easy. Spinoff. I mean, that's a rule of thumb. It works. I vouch for it. Although I haven't. There's a website that tells you about spinoffs and stuff. I used to track it pretty closely, but I haven't been lately. I should try to find that. It's like spinoffs.something. That's how I came across this one. It was sick. Triple. Oh, it's got $9 in book value, but leverage though, huh? Wait, how would the bonds look? What did we say? Oh, shit, did I miss them? Oh. They were bouncing back. That's right, in the 60s. But when were they due? Oh, I'd buy this again, I guess. This is looking real good. Okay. It's almost looking like bankruptcies. Okay, so this was a 550. So is this most of their debt? When's it due? Offering date in 2014? When's it due? 2024, 10-year debt, 5.5% rate. Different business now, but okay. So how much? What's the total amount of debt that we see in these financials? Oh man, we don't have time to be wasting going all over the place. Book value. I'm just looking for aggregate debt right here. Total debt. Okay, so that's half of it. That 500. So they have another round of debt. All right. $1.7 billion. 1.7. Look at that operating cash flow, still positive the whole damn time. You know what I mean? They had a really negative announcement late last year. It was something like they weren't even sure they can continue as a going concern. They had to get waivers on some shit. Now it's coming to me as I look at this stuff. And I was looking. I remember, and that was weighing on me too. That was weighing on me because I'm like, oh shit. Then when COVID hit, I'm like, oh, how are they gonna be able to bounce back from this? Considering they were already in trouble last fall. You know what I mean? Then I'm like, that was why I didn't pull the trigger. Now it's coming to me. I mean, I need to dig back into that. And they had the waivers. There was something like that. This is all from memory, so I don't. Maybe it's changed. They got the waivers, or they on stronger footing. But look at this net cash flow. This is what's $2 in net cash flow. That's good. Issuing shares. Look at this share issuance. They need some support though. Is anyone? Didn't I just look this up? It's getting late. Getting late. Yeah, I didn't see anything. Nah, man. Nothing? Bummer. Well, I'm looking for just one other thing. Maybe Boynton buys one more round, you know? But he did buy. He bought down there. That's tough. It increases position 31%. Oh, one more round, Boynton. One more round. Look at, he was buying back at $13 too, and he was buying at $3. We're right there. We're right back to where he was buying. Not that no one else is touching it though. Shit. All right, I gotta dig deeper into it. What else can I say? That's it. See what I mean? I say dig deeper. That should be part. Like I have to dig deeper. Shouldn't I be streaming when I dig deeper? It's kind of silly that I would. That's the whole point is education. You know what I mean? Like you got to see the digging deeper into it. That's part of the boring stuff. That's part of the process. Although you kind of get hopefully you get the feel for how it works. What I'm looking at the news releases and stuff, and it's similar stuff. It's just taking the time to do it. But okay, all right. That was a nice little quick check there. We got through a lot of stuff. But a lot of time spent on GameStop today. But cheers. Let's. There's nothing. There's not going to be. It's 10 o'clock on a Friday. There's no updates. We'll see if there's any articles this weekend on it. I doubt it, but it'll probably hit some headlines. But next week, let's see where GameStop opens. Next time we sync up, it'll be after GameStop opens on Monday. I think it will be up, but what the reaction will be, I'm not really sure. Watch it be down. We dedicate an hour and a half today to this news. Watch it be down on Monday or some shit. But I'm eager for the news articles and the interviews with him, what he says about it. That's what I'm really interested in. And then, of course, the earnings. Now we'll see what will come of earnings. It'll be interesting. But yeah, that's it. Cheers. Thanks for tuning in. Thanks for the questions, Derek. Now it's fun too watching some videos on the stream. That's a first, Tom. That's a first. But all right, have a nice weekend, and yeah, see you next week. All right. Okay. Peace out.